we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched.
Okay, traders, as you can see, position closed on British pound. We earned 200 pounds, 2 pips. For all of you guys who follow our trade, who copied this trade, you made a profit again. Well done. Let's move on. Let's look for another trading chance and opportunity to make profit on this bank holiday in United Kingdom. Stay safe.
没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの発言が出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていう存在自体がボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでにプロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいになってきて、ライブも数十本、数百本だったので、そういうことが演奏によって起こせるためのそういう器みたいな感じになってきて、初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在している。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer. But humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
Expose everything you won't admit. And action. This entire video is based on a true story. When I do like motivational speeches or even tell myself like love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone's a girl? Superwoman. I know know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms, and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad, and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And 3, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play, because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas, and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution, because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future, In coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, an equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life.
Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube size concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
30 days, September, April, June, and November. Yeah, folks, we are coming to the end of August. Just a couple of days left. Hard to believe, but what a summer it's been. Welcome to Bloomberg Business Week, live in our Bloomberg Interactive Brokers studio, streaming on YouTube. I'm Carol Masser. My host, Tim Stenovic, is off on this Monday, August 30th. Check it out, though. S&P 500 on track for its 12th record this month. In fact, both the S&P and the NASDAQ seeing record moves today. That's despite Tropical Storm Ida sinking some parts of the financial markets and despite troubling COVID headlines. So we're going to talk about all of that. Coming up, we've also got John Paulson on crypto. Here's a hint. Doesn't love it. Also, tech entrepreneurs, show of solidarity in the form of cash. And we've got the ultimate pandemic play reporting after the closing bell. Let's get you going, though, on this Monday with a check on that trade. Here is Charlie Howlett.
Thank you very much. Happy Monday to you, Carol Masser. Let's begin with that work-from-home play. Zoom Video Communications shares higher now by 1%. We'll have those numbers for you as they break right here on Bloomberg. S&P up 26 right now. We're looking at a record up by about 0.6%. Some of the world's biggest tech companies leading the way higher. Among them, Apple shares trading at a record today. Apple shares are advancing right now. Shares of Apple, they're up by just about $4.76 in terms of the percentage on Apple. That is a gain now of 3.2%. The Dow just turning negative, down 5. Little changed on the minus side, though. The S&P, again, at a record up 0.6%. NASDAQ higher by 1%. 10-year up 6/32. 10-year yield 1.28%. Spot gold down 0.4%. 18.09 the ounce. West Texas Intermediate crude up 0.6%. 69.14 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, what was the Dow? Can't seem to keep up with the S&P and the NASDAQ. All right, that is Charlie Pellet. Let's get to your market drivers report. And let's set the Business Week agenda on this Monday. Dave Wilson, stocks editor at Bloomberg News, in our interactive broker studio. To my left and to my right is Kriti Gupta, Markets Live reporter at Bloomberg News, both, of course, in our interactive broker studio. So, Dave, let's kick it off with you. Charlie, breaking down the numbers. We're looking at maybe, another record on the S&P and the NASDAQ here.
Number 53 for
I
the
lost
S&P
track.
500 this
Lucky
year.
53.
or something like that. But really, the number of the day is $2.5 trillion.
You're talking about Apple?
I am.
Yeah.
Crossed that particular market value threshold for the first time. And, you go back, and according to our numbers, in March of last year, when we reached the lows after that short-lived bear market, Apple was at $1 trillion. So it's added $1.5 trillion in less than 18 months. It just goes to show you how strong the gains in this market have been. When you look at a company that size, and it can add $1.5 trillion in that amount of time. I'll tell you, that certainly stands out. And beyond that, there are a lot of stocks that are taking hits one way or another. I mean, even though you've got the S&P 500 up 0.6%, it's not as broad-based as you might expect. Right. You see the airlines down. Now the European Union is banning, or at least calling on its member states to ban travel from the U.S. That's part of the mix. You have the effects of Ida, notably in energy, the utility that serves much of Louisiana.
Which is a logical trade to me.
Absolutely.
It's not like everything's falling apart.
It's down 2.7% at the moment. So, there are plenty of bits and pieces. PayPal, biggest gain in the S&P 500. CNBC reporting that it's thinking about going into the U.S. stock trading business. In other words, having a site, going up against the likes of Robinhood, which, by the way, is down in response to that report, lower by 3.7%.
And why not in this atmosphere? Kriti, come on in on it. I think what Dave was interested, or what I found among the things he said that was interesting, is just it's not broad-based in terms of the buying. We're seeing about 289 names, 290 names in the S&P higher today, 215 lower. So there is a fair amount of selling going on.
Yeah, absolutely. I mean, a defensive tone to the market broadly. There is some sentiment. I've kind of heard mixed things on the street here. Some people saying there's a little bit of a spillover effect from last week from Chairman Powell saying that tapering does not signal tightening. So that could
if you listen to Bloomberg, we've been saying that for several weeks.
Yes, on repeat. Big shout out to Michael McKee for that. But this is something that is interesting because it's still a defensive take. And on the micro basis, it's worth noting that when we're talking about upside stocks, Generac Holdings is doing amazing. This is the backup portable generator supplier across the country, and they thrive on, this is kind of a cynical thing to say.
GNRC is the ticker, up about 2% here.
Absolutely, and they had hit an all-time high. I think when I first saw it, it was up like something like 5%. They've pared back those gains in line with the broader market, but that's a pretty interesting hurricane read-through. You also have, of course, ExxonMobil, for example, which was higher originally on those gasoline prices, on this idea that the damage wasn't as bad as initially thought, and even those are down because they've had to shut their rigs altogether instead of still, producing and refining at half capacity.
What do you guys make of the trade today, though, that we are, increasingly again talking about records here on the major equity averages, and yet COVID numbers are troubling. We're seeing, again, European Union pull back in terms of travelers from the United States. So we are seeing, again, kind of that slowing of the roll out of reopening. I don't know, Dave, what does it say to you?
Well, this is one of those days when big tech just comes to the forefront. I mean, you look at the 11 main industry groups in the S&P 500, what's leading the way? Technology, the consumer discretionary category where you find Amazon, made this deal with a company called Affirm Holdings, where you can do a buy now, pay later
One
plan.
of my movers later
Absolutely.
on.
And well, it should be, considering Affirm's up almost 46%. But beyond that, communication services, where you find, Facebook and Google's owner Alphabet. So, I mean, it looks kind of like a familiar day in that regard. If only because, we've seen these companies defy all kinds of things as they move higher, valuation concerns, government intervention concerns. And so now, you add the virus to the list.
I always find it interesting about the big tech. There's another story by Ryan Vlastelica who talks about Alphabet beating rivals with a 65% gain in the longest rally since 2009. Kriti, how many times have you heard, I bet you guys have been blogging it, big tech, you got to move away, their run is over, and yet here they are.
Here they are. But, there is kind of a nuance to the big tech names. The fact that Alphabet has been outperforming, I mean, think about it. Alphabet, Facebook, to some extent Amazon. I'm going to stick with Alphabet and Facebook. They are more exposed to kind of the business recovery cycle. A lot of their revenue comes from ad revenue at the end of the day, and they were underperforming. They were the worst performers in the big tech sphere last year. So if you think about it from kind of this recovery trade, reopening trade point of view, which has really dominated the markets year to date, it kind of makes sense that Alphabet is outperforming. This week in particular, though, I think it's worth mentioning that we have OPEC on Wednesday and we have payrolls on Friday, which are the two
You took me right
pieces.
where I wanted to go,
There you
especially
go.
jobs.
Inflation and labor, right? It all comes back down to the Fed, and we get some indication this week.
Although we know, is it Larry Summers and some others who are questioning that whether or not the Fed should be focusing on jobs, maybe that's not the smartest indicator, because they're saying the pandemic has changed, and there are folks out there, very smart folks, who think that post-pandemic job levels will not be where the pre-pandemic levels were, meaning some people have just said, I'm done. I'm not going back to the workforce.
Yeah, there may well be a few people like that, going forward, whether they're looking for work, they're going back to school, or they're just saying, I've seen too much because of COVID. I don't want to, let the opportunity pass to do whatever I want to do. So, yeah, I mean, these are all issues that are out there front and center. I mean, it points up the challenges companies have. When you hear about businesses closing because they can't find enough workers, which has happened sort of on an anecdotal basis, it tells you where we are right now.
Well, and it's just some of the, folks are questioning whether or not Jay Powell is focusing on the right metrics in terms of when to back off on some of the stimulus measures. All right, guys, got to run. Dave Wilson, Kriti Gupta, thank you so much. Dave will be back with his chart of the day. It is time for the Bloomberg Business Week Bite of the Day, one number that tells us a lot, brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com. Today's number, 100 million. Wynn Resorts will spend more than $100 million this football season marketing its new sports betting app, showing how seriously casino operators are now taking the fast-growing business of online wagering. The company debuted a new TV ad today. You might have seen it. It's directed by and starring actor Ben Affleck and Basketball Hall of Famer Shaquille O'Neal, a brand ambassador for the company's app, WinBet. All right, let's get you going, though. When it comes to world and national news on this Monday, a lot going on. Let's check in with Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Pentagon officials say with tomorrow's deadline looming for U.S. troops to leave Afghanistan, they are aware of continuing threats.
The threat stream is still real, it's still active, and in many cases it's still specific, and we're taking it very seriously, and we will right up until the end.
Spokesman John Kirby says due to those ongoing threats, officials are not saying whether the gates to the airport remain open, and he says for those Americans and others who want to leave, the State Department will continue to work on making that happen. Well, Louisiana residents are assessing the damage from Hurricane Ida that's left more than 1 million people without power. David Freeze is with Entergy.
Some areas where we can't get boots on the ground, we're going to have drones up in the air and hopefully be able to utilize helicopters to inspect the damage.
Freeze says their biggest challenge will be replacing a major electrical transmission tower in New Orleans, which collapsed. The National Hurricane Center says the threat now is to folks in Mississippi, Alabama, and the western Florida Panhandle who could see heavy rainfall and flash flooding. A senior Chinese diplomat is calling on U.S. Secretary of State Antony Blinken to work with the Taliban government. Chinese Foreign Minister Wang Yi wants the U.S. to provide economic assistance to the new Afghan government. He also urged Blinken to stop pressuring China over the origins of the coronavirus. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Nancy Lyons in our D.C. Bureau. Joining me right now is Charlie Pellet of Bloomberg News. And Charlie, let's just go through a few of the stories that we've got when it comes to COVID and the vaccine today. This story I've been thinking about a lot from over the weekend, reading in on it. South African scientists said that they have identified a new coronavirus variant that has a concerning number of mutations. It's called C12, and the variant was first identified back in May in the South African provinces, a couple of provinces, I should say, in South Africa, where Johannesburg and the capital, Pretoria, are situated. The scientists said in a research paper by August 13 it had been found in 6 of South Africa's 9 provinces, as well as the Democratic Republic of Congo, in Portugal, New Zealand, and Switzerland, and a few other places. And this is something you know, right? The conversations we've been having with the medical community is the concern that this virus will continue to mutate, and we're just hoping, fingers crossed, that our vaccines stay ahead of the mutations.
Indeed, and to give you a sense of just how rapidly this thing has been expanding, the variant accounted for 0.2% of the genome sequenced in the country back in May. Now that has risen to 1.6% by June and up to 2% by July. So no question, those numbers heading, Carol, very much in the wrong direction.
And what they remind us now, keep in mind, too, that South African scientists also discovered that beta variant in 2020. They have stressed, the scientists there, that the country's advanced ability to sequence the genomes of the virus enables the identification of new strains they could have originated elsewhere. And so it doesn't mean they necessarily originated there, but they have the capability to track them. And this just all goes back to trying to understand how this virus moves, how it mutates, and what we need to do to stay ahead of it, Charlie.
And Carol, very briefly, the Education Department here in the U.S. has opened civil rights investigations in 5 Republican-led states, asking whether bans on school mask mandates discriminate against students with disabilities at severe risk from contracting COVID-19.
Yeah, a lot of back and forth certainly going on between federal government, states, cities, and educational systems. All right, thanks, Charlie.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow back in the green, up by 3 points right now. Little changed. S&P at a record, up 26, up 0.6%. NASDAQ higher by 153 points, up by 1%. Stocks are being led higher by some of the world's largest technology companies. Apple, for example, with a market cap now of $2.5 trillion. Apple shares up now by 3.1%. After the bell, we'll be hearing from stay-at-home darling Zoom Video Communications. Shares up now by just about 0.8%. PayPal Holdings is rallying on a news report from CNBC that the firm is exploring a stock trading platform. PayPal shares up now by 3.4%. Again, the S&P trading at a record up 0.6. We do have the 10-year up 5/30 seconds. 10-year yield 1.28%. Spot gold down 0.5%, 18.08 the ounce, while West Texas Intermediate crude is up 0.8%, 69.30 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are up to date on the markets. Let's get up to date, though, when it comes to COVID. We do have U.S. public health advisors meeting today to talk about booster shots, with the White House eager to get a nationwide rollout going by September 20th. Keep in mind the number of U.S. COVID-19 fatalities in this month, in August, already at the highest monthly total since March. You've got EU countries voting to reimpose restrictions on non-essential travel from the U.S. There is a lot going on. So let's get our daily check on COVID. Dr. Lalu Feyanju, he is Doctor of Medicine at the publicly traded Oak Street Health. They're a network of primary care centers taking care of Medicare patients, and they've got about $11 billion market cap, give or take a few. He joins us on the phone in Toledo, Ohio, where they are opening up another clinic. Dr. Feyanju, good to have you here with us. Tell us about what you are seeing when it comes to COVID currently.
Well, first of all, thank you for having me today. On the front lines here in the communities, we are seeing more cases of folks, mostly younger people, who are now presenting with COVID cases. There are still, we're only as a nation about 52% fully vaccinated, so there are still a lot of folks out there who are still vulnerable to the infection. At Oak Street, we've been working really hard to get our patients vaccinated. We work with mostly older people, older adults on Medicare and Medicaid, vulnerable population. So we've been focused on this since the very beginning, since the first vaccines were available late last year. We've been able to vaccinate we've given out 185,000 doses across the United States, and that's a combination of Pfizer, Moderna, and J&J vaccines. And we care for over 110,000 people in our 103 centers across the country. So we know that taking care of this population during this time is mission critical for what we do.
Are those people, this population, the Medicare population, is it largely, I'm assuming, right, older folks, and that they are more inclined to take the vaccine, or is that not the case?
It's a mixed bag. You know, I work here in Ohio, and some of our, and I see patients with our staff across the state. In some communities, you know, there is strong support for the vaccine, and conversations are usually very straightforward. Would you like a vaccine? Yes. And we go ahead and vaccinate. Sometimes we have to have some more involved conversations with some of our patients about their hesitancy about getting vaccinated, and others are adamantly against it. So, you know, we're making progress. It's slow but steady progress at getting everyone vaccinated.
And what about when it comes to minority members of the Medicare community? Are they even more hesitant?
You know, it's interesting. I would say that among some of our patients, there's hesitancy. I'm not at the point where I'm willing to say that this is something that is defined by our minority communities. There's certainly hesitancy, much of that born from, or that comes from historical precedents around distrust of the healthcare system. And so as an African-American physician, I know that I'm in a unique position to help people understand that, one, this vaccine has been produced under some of the highest scrutiny probably in human history, that it is safe, that it has been developed with a mind around ensuring that this is a vaccine that works for all people. We continue to educate on this, and we're changing minds. We're changing minds amongst our communities that we serve, and we're getting folks vaccinated, which is very fulfilling and edifying.
Yeah, it's interesting when you say that because you're right. The difference has been we have been seeing the development process roll out really in front of our eyes. So all of the problems, which often happen with any kind of vaccine development or even any kind of medication development, but maybe it's not so front and center, at least among the mass public. But we are seeing the vaccine development and process happening in front of our eyes. But it's interesting because of that, as you say, there's probably heightened scrutiny on every single step along the way because of it.
And that's not a bad thing. I think it's good that we have a transparent process of development, that people are learning more about how we approve vaccines. An area that's oftentimes been a point of contention has been the distinction between an emergency use authorization and quote unquote full FDA authorization. While the two terms are not the same rigor, the rigor that has gone into making vaccines available under our EUA process under the FDA is incredibly high. The rigor is very high. The quality of that process has been very, very clear and transparent, and it has helped us as frontline physicians deliver this vaccine with a high degree of confidence that it's effective, and that if more people get vaccinated, we can turn the tide here. With the Delta variant now the dominant strain in the United States, we have to get everybody vaccinated, especially as we are approaching flu season. And for my pediatric colleagues, RSV is another major virus that can impact kids. We need our folks vaccinated because the prospect of having another winter like the one we had last year is, quite frankly, frightening.
Right, exactly. We're going to leave it on that note. Thank you so much. Really great to get your thoughts on this. Dr. Lalu Feyanju, he's medical director of Oak Street Health, joining us on the phone from Toledo, Ohio. Speaking with him on a day where global COVID cases topped 216.6 million, deaths passing 4.5 million, and as it pertains to the actual COVID vaccine given out, more than 5.22 billion doses have been administered across the world. You are listening to Bloomberg Business Week. Right now we've got the Dow down about 7 points, the S&P 500 a gain of 25, NASDAQ up 147, up almost 1%, so really the outperformer on a percentage base. As you know, we've been talking about records again for the S&P 500 and the NASDAQ. That's where you're seeing the momentum. Coming up, we're going to talk about Hurricane Ida, now Tropical Storm Ida, and the impact it's had. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
And you are listening to Bloomberg Business on this Monday, August 30th. I'm Carol Masser in our Bloomberg Interactive studio. My co-host, Tim Stenovic, is off today. Hey, coming up, we're going to get the latest on Hurricane Ida. It's now been downgraded to a tropical storm. It's not done yet, but it has moved out of the New Orleans area. But we'll get the latest from our own Joe Carroll from Houston. First up, though, let's get back to the trade and today's market moves. In fact, a couple of records there, Charlie Ballett.
Indeed. Let's begin with Apple shares. They are pushing higher, as you mentioned. Tech leading the advance today. Apple up now by 3.1% in terms of the equity benchmark records. S&P up 26 at a record 45.35, extending the year-to-date gain now to 20.7%. S&P up right now by 0.6%. NASDAQ up 149, also at a record up by 1%. The Dow, however, lagging, lower now by 8 points, down less than 0.1%. American Express, the leading decliner among the Dow average. Stocks being led higher by some of the world's largest tech companies concerned about the damage from Tropical Storm Ida, sinking insurers and energy producers while pushing gasoline prices higher. We've got the 10-year, the yield there, 1.28%. Spot gold down 0.5%, 18.08 the ounce. West Texas Intermediate crude oil up 0.7% now, 69.21 for a barrel of WTI. South Africa has told the World Health Organization that a new variant of the coronavirus might be circulating in the country. This, according to a report from the news website New Frame. It comes as U.S. public health advisors meet today to discuss COVID-19 vaccine booster shots. Dr. Joshua Sharfstein is vice dean of the Johns Hopkins Bloomberg School of Public Health. He says medical experts are definitely keeping an eye on the latest variant.
Biggest issue, of course, will be if there is a variant that really can make people who are vaccinated sick, and I have not heard at this point about that emerging. It's going to obviously be what happens, particularly if it starts to spread.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Mixed day for a lot of the vaccine stocks that we track. Pfizer shares, they're up 0.2%. Its German partner BioNTech, lower by 4.2%. AstraZeneca, little change, down less than 0.1%. Moderna, lower now by 3.5%. J&J, Johnson & Johnson, up 0.5%. Recapping stocks mixed, S&P at a record up 26, up 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Charlie, thank you so much for that update. You're listening to Bloomberg Business Week on this Monday. Well, the Category 4 storm, Hurricane Ida, now a tropical storm, could cost insurers at least $15 billion, packing some of the most powerful winds ever to hit the New Orleans area. And as it lumbers north, Ida is unleashing a catastrophic amount of rain that could total 2 feet when all is said and done. Let's get an update on the storm, its impact so far with Bloomberg News Houston Bureau Chief Joe Carroll. He is on the phone from Houston. Hey, Joe, great to check in with you. So what is the latest that we know about the impact of this storm?
Well, we've still got more than 1 million households and businesses without power in Louisiana alone. The numbers come down slightly, but it's going to be, it could be weeks before the bulk of those are restored. There's been really catastrophic damage done to the transmission system. There's one of the main cables is actually in the Mississippi River, and along with the tower that was holding it up. So there's really a massive amount of work to be done.
Well, in an evil, in kind of an evil twist of fate, or Mother Nature kind of with her own evil take on timing, right? It happened on the 16th anniversary of Hurricane Katrina, which made us all, we would have probably anyway, compared this storm to Hurricane Katrina. What were the similarities, Joe? What were the differences?
Katrina was actually a larger storm geographically.
Mm-hmm. Right.
The chilling thing about this last night when everything was blowing and going was structures like transmission towers that withstood Katrina actually came down last night. And so that really shocked a lot of folks who didn't think a physically smaller storm would actually do more damage. The upside is that the levee system, which was reinforced after Katrina in New Orleans itself, it held. And so for that reason, we're not seeing the sort of horrific flooding and mass deaths that we saw in that storm in 2005.
Well, and you know, with storms, sometimes it's about the wind, sometimes it's about, as you said, you know, the geographic impact, sometimes it's about the water, sometimes it's about all of that. This storm in particular, was it about the winds?
For New Orleans proper, it was about the wind. When you go into outlying areas, Plaquemines Parish and say St. James Parish, these more rural and distant, isolated places, the water, you know, the homes are inundated. It's search and rescue mode. We still don't know how bad the damage is out there.
And one of the things that we keep reading about, as you well know, our team and you and everyone reporting that there's been a lot of fires after this storm has passed through. What do we know about that?
There was an enormous amount of lightning came in with when the storm rolled ashore. We believe it's not been investigated, but that lightning started a lot of these building fires, and then the problem was there was no water pressure. Firefighters couldn't drive their trucks because the wind speeds are too high, and even if they could get there was no water to put the fires out. And you know, water scarcity is still a big problem in a lot of places.
Joe, you know, Bloomberg and our teams have often reported about some of these low-lying areas, and I think the questions are out there about whether or not we need to remove people from these areas, especially with climate change and rising sea levels or the frequency of storms, whether or not we need to maybe relocate people. It does seem like the areas that always get hit the hardest continue to get hit the hardest. What's the thinking about that?
Yeah, it's that is the toughest question to answer, because even in the case of this storm, when folks are told you need to get out, there's no way to withstand this and to just hunker down. A lot of folks still stayed. And then the other side of that we're seeing today is the mayor of New Orleans and the governor of Louisiana are both asking those who did evacuate. We had a big rush of folks come here to Houston day before yesterday. They're saying don't come back yet. It's not safe. We don't know if your house is still standing. There's no power. There's no water. And so we don't have a number for it, but it's a lot of people who are sort of stuck in this limbo waiting to see what's going to happen.
How long will it take for some of the repair to be good enough for people to come back? Are we talking weeks? Are we talking months?
They don't know yet. The power, like I said, the power is going to be out in a lot of places for weeks, but they really don't know even how long it's going to take to clear the highways.
And we're not done yet with this storm, right? Because I have a radar app on my phone, and the storm's now making its way up north. What's the expectations there, or the forecasts?
Yeah, and the surprising thing is that it's still so powerful. You know, it's not a hurricane anymore, obviously. But like you said, when you look at the radar, this is a monster storm still. And the bad news for New Orleans is that all that water that's moving up in Mississippi and in Tennessee, that still has to come down the river system. So it's going to arrive again.
Unbelievable. It's just amazing. And I know some of the flows, I think, was it the Mississippi River? Actually, the flows actually went in the opposite direction because of all of the water. Hey, Joe, thank you so much. Really appreciate the update on that. Bloomberg News Houston Bureau Chief Joe Carroll joining us on the phone in Houston. All right, a lot going on across the nation, across the globe. Let's get an update on that with Nancy Lyons in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. Rescuers are using hundreds of boats and helicopters to reach people that are trapped by the floodwaters of Hurricane Ida, and utility crews are working to restore New Orleans' electrical grid. President Biden, speaking with governors and mayors from the hardest hit areas, says crews are coming in from 30 states to help restore power.
We're in close contact with local electric providers to see what they need. They're all private providers. We don't control that, but we're doing all we can to minimize the amount of time it's going to take to get power back up for everyone in the region.
Biden says people need to shelter in place if it's safe to do so. Ida has weakened into a tropical storm and is bringing heavy rains to Mississippi. More than 122,000 people have been evacuated from Afghanistan as the U.S. withdrawal winds down. That includes more than 5,000 Americans. Army Major General Hank Taylor today also briefed reporters about a thwarted attack at the Kabul airport over the weekend.
U.S. military forces conducted an unmanned over-the-horizon airstrike on a vehicle known to be an imminent ISIS-K threat. This self-defense strike successfully hit the target near Kabul airport. Significant secondary explosions from the targeted vehicle indicated the presence of a substantial amount of explosive material.
And Taylor says 5 rockets were also fired on the airport. One of them was neutralized by U.S. forces. Another fell on the airport grounds with no damage. 3 fell outside the airport with no damage. The Pentagon characterizes the ongoing threat as very real and active. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons, there with World and National News. Joining me right now is Charlie Pellet of Bloomberg News. And Charlie, a story by our Patrick Clark on the Bloomberg has to do with landlords possibly getting ready to throw out, evict roughly 750,000 U.S. households by the end of the year. It all has to do with the lapsing eviction bans and high demand for rental housing are pushing property owners to remove tenants. So this all has to do with the measures, right, that were put in place because of the pandemic to let people stay within their apartments and put off paying rent. That was one of the conditions. Well, now that is being allowed to come to an end, and so now we're going to see what landlords do with those people who cannot or are not paying their rent.
Indeed, and Goldman analysts estimate that as many as 3.5 million households are behind on rent. Landlords are owed as much as $17 billion, according to that note from Goldman. Delinquent renters have been able to remain in their homes during the COVID-19 pandemic. But as you said, the Supreme Court did lift that federal ban on evictions last week.
Yeah, and in terms of the money that went out to landlords, Charlie, Congress authorized almost $47 billion in rental relief to compensate landlords for lost payments during the pandemic. But as we've been reporting, state and local governments, they've been slow to get those funds out, especially to those who really need it. And then you've got that going on. On the flip side, you've got shortages. We talk about this, right? Housing, for sale and rental housing, shortages of all of that. That is causing landlords to rapidly increase rents as properties become vacant. So there's huge demand for properties, rental, purchase as well. So landlords are thinking, well, maybe I will have to evict somebody so that I can actually sell it or rent it to actually a paying tenant.
Indeed. One very quick statistic, Carol. According to RealPage, rents on newly signed leases in the U.S. surged 17% in July when compared to what the prior tenant was paid, reaching the highest level on record.
That is a big number. All right, check out all when it comes to housing and the property markets. You can do that by just going to Bloomberg.com. Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at a mixed Monday here. The Dow lower, S&P, NASDAQ both higher. In fact, records for the S&P and NASDAQ. The S&P is up 24 points, up by about 0.6%. The Dow is down 15, lower by about 0.1%. NASDAQ higher by 147 points, up by 1%. Again, a record for the S&P and NASDAQ. The NASDAQ 100 index also pushing higher, up now by just about 1.2%. Apple shares, they're pushing higher. Apple at a record, up now by 2.9%. 10-year up 6/32, 10-year yield 1.28%. Spot gold down 0.5%, down 18.08 the ounce. Spot gold down $8.90 the ounce. West Texas Intermediate crude up 0.5%, 69.05 a barrel. One company that stands to benefit from a series of natural disasters, including Hurricane Ida, that have hit the U.S. this year. Generac Holdings, a supplier of backup portable generators, shares up now by just about 1.1%. Recapping, S&P at a record, up 25 points, up 0.6. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, there are a few economic stories on our agenda this Monday. There are some high-frequency charts out there that specifically show the U.S. economy softening from the Delta variant. That variant, we know, is certainly on Fed Chairman Jay Powell's radar. We got that confirmation on Friday from the Jackson Hole meeting. So here with the high-frequency charts that we're focusing on and why you should be as well as Bloomberg News economics reporter Steve Matthews. He is on the phone in our Atlanta bureau. Steve, so great to have you here. I love this story, So Smart, by you and Jill Shaw. So tell me about the charts that you looked at and what it shows us.
So, Carol, what's interesting here is a lot of the official government data is lagged, and therefore it's less useful. But you can find out, if you want, how many people went through airport checkpoints yesterday. There were 1.9 million people. You can find out what the hotel occupancy was last week. You can find out lots of things from kind of looking at anecdotal and survey data that is from unofficial sources. And what we found out is that, maybe not surprising, but maybe a little bit concerning, is that travel and tourism data is all gotten substantially weaker. People dining out via open table, that data has gotten a lot weaker in August than it was in July. And this will be interesting to see how things develop on Friday when you have the official government jobs report. But there are some signs that the job market might be easing back a little bit. Yes, there's a lot of demand for workers, and some companies are having trouble hiring, but the bookings for jobs, the listings on things like Indeed have come down a bit, particularly on jobs that might be COVID sensitive, such as childcare. I mean, you're going to hire childcare workers only if you're comfortable with having your kid next to a childcare worker. You're going dental offices, for example. There's been weakening for bookings for those type of jobs. So all in all, it presents a little bit of a story of weakening demand, and it'll be interesting to see how this shows up in the official data.
Steve, it's like working for a hedge fund, right? These are the things you'll look at that might be so much
Absolutely.
more like moment in time to give you an idea of what people are doing today, not last month.
Yeah, and in fact, you get some pushback on this because almost all this data is not seasonally adjusted, and there's some uncertainty about it. So it is less precise than the official data, but it also is stuff that happened yesterday or happened last week. So it's like, if you want to know what's happening now, you really have to look at the high frequency data.
You know, one of the things I think, Steve, that we've talked a lot about here, certainly on air, is about the number of companies that are rolling back bringing back workers to offices. And that feels like a big one because that has a trickle down, trickle across, triple upward effect because you don't go to work, maybe you're not buying lunch, you're not maybe stopping at a store to pick up something, you're not getting on mass transit. It really changes things.
That is interesting because Castle Systems tracks the number of people who badge into an office every week. So it's like, when I go into the Bloomberg office, I have a badge, I wave my badge, it says I'm in the office building, it says I'm in the office. Pretty much everybody does that across offices everywhere. Last week, the number of people badged into offices in 10 cities went down at every city. And it's like the number of people in offices is still around 30% of what it was in 2019. It's like people talk about back to office, it's really not quite happening yet.
Well, and what's interesting too, and I think it's timely, Steve, in a week where we're going to get the monthly jobs report on Friday. I can't remember, it's Larry Summers. I have to quick do a Google on and a search on the Bloomberg. But there have been folks out there who are questioning some of the metrics that Jay Powell and company, Jay Powell in particular, are tracking in terms of deciding when to start significantly changing Fed policy and saying that, wait a minute, maybe it's not so smart to track the unemployment rate because there have been dislocations in the labor market because of COVID, and we know it. I know people who have retired or said, I'm not going to go back to work, or I'm going to work differently, or I'm going to work part-time, that it is a longer-term trend and change, and I wonder what you're hearing on that front.
Yeah, that's absolutely the case. And in fact, it'll be interesting really on Friday because as Jay Powell said at Jackson Hole, virtual Jackson Hole because it was canceled, you can't look at just the unemployment rate. The unemployment rate may go down, but you have to look at things like the employment population rate, the percentage of the population that's employed. You have to look at labor force participation because these may not recover quite as fast. And the fact that the unemployment rate is going down may not give you a picture that's accurate of what's happening with the labor market if people are staying out of jobs because they're afraid to work because of COVID.
Right, exactly. And so we're not quite sure all of the impact, and I guess we just have to go from data point to data point.
And if you want to wait 6 weeks, as the Fed does from meeting to meeting, if you're Jay Powell, you say, well, maybe we'll know more in another 6 weeks when we have the September jobs report. So it's building the case for waiting a little bit longer.
Hey, another great point and story on the Bloomberg has to do with how the Delta variant is starting to ruin trades. This is a headline I'm reading. Ruin trades epic run on our Bloomberg tracker, and basically just tracking global goods and how they are trading. And a team of our reporters led by Michelle Jamrisko put this out. Trade, what is trade telling us right now?
Yeah, this is really interesting too, because it's like in the spring when you started to have some of these supply chain issues with for example, with auto components and with other with lumber and housing and et cetera. You heard the Fed and other economists say, okay, this is transitory. We know there's some supply chain issues. The economy is reopening after COVID. But, just hold on a few months and things will go back to normal. And that is not happening. It's like, in fact, when you look at what's happening across international trade across the world, things are getting worse marginally from the previous month. You have ports in China closing. You have disruption basically everywhere because of Delta. I mean, things are not moving back to normal, and that means these supply chain issues and these inflation issues are going to last a little bit longer.
All right, a little patience, I guess, is what we all need. Hey, Steve, thank you so much. You broke down a lot, and I highly recommend everybody check out Bloomberg.com or go to the Bloomberg terminal and check out these stories. Steve Matthews, economics reporter at Bloomberg News. Coming up, a bunch of headlines out of China again. Video games, what's going on? Our Andy Brown will be back, a Bloomberg New Economy, to break it down.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Monday, August 30th. We do have the Dow lower, little change, down 4 points now. S&P, NASDAQ, both trading at records, with the S&P up 26, a gain of about 0.6%. NASDAQ higher by 155. NASDAQ up now by 1%. 10 years up 7/30 seconds. 10-year yield 1.28%. Spot gold down 0.4%. 18.10 the ounce. West Texas Intermediate crude oil up 0.5%. WTI 69.11 a barrel. Stocks climb, led by some of the world's largest technology companies concerned about damage from Tropical Storm Ida, sinking insurers and energy producers today while pushing gasoline prices higher. Again, the S&P at a record up 26 now, higher by 0.6%. The Dow lower now by 1 point, little change there. As for the Federal Reserve and tapering, Joanne Feeney is a partner at Advisors Capital Management. She was interviewed this morning on Bloomberg Surveillance.
I think we can expect to see, further accommodation as Chairman Powell signaled. Going to keep those interest rates low even as tapering starts to come off. It sounds like by the end of the year, and that means that the long end of the curve is going to be less anchored, which is what tapering really does. Is it loosens up that constraint. So we should see a steepening of the yield curve, and that'll have an asymmetric effect on equities.
Airline stocks, they're trading lower after a surge in bookings early this summer. Airline passengers are planning fewer trips as the spread of the coronavirus Delta variant continues to discourage travel. Spending for the Labor Day holidays down 16% from 2019. As of August 21st, bookings off 15%, according to the Adobe Digital Economy Index. Among some of the airline names, UAL down 3.5%, American down 2.8%, Delta down 3.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic from Bloomberg Radio.
And you are listening to Bloomberg Business Week on this Monday. It is brought to you by SEI, with an operating platform designed to support all major asset classes, diverse strategies, and investment vehicles. SEI is redefining wealth management. Learn more at SEIC on online gaming played by minors. Also looking at the steady flow of headlines out of Beijing as it cracks down on a growing number of industries and sectors, and looking really to spread wealth more broadly. And looking at that is our Bloomberg New Economy editorial director, Andy Brown. He writes over the weekend about what wealthy tech entrepreneurs in China are doing to show solidarity when it comes to the Chinese government. Andy joining us on this Monday on the phone in New Hampshire. Andy, I read your column. It looks like, to me, almost a forced yet strategic form of philanthropy that's going on in China among the tech entrepreneurs. Tell us what's going on.
Yeah, that's exactly right. This is political theater of the highest order. President Xi Jinping, as you say, is on a campaign to promote common prosperity. In doing so, he's reviving the Maoist-era spirit of egalitarianism. And the country's billionaires have got the message, and they're coughing up billions of dollars, something like 13 billion just in the last few months handed over to charity. Great if you're looking at your billionaires and your most dynamic Chinese companies to hedge their political risk. If you're a shareholder, perhaps you're not quite so happy.
Andy, is this the Cultural Revolution 2.0 in some ways?
Look, a lot of this is about politics, and during the Cultural Revolution, people in China feigned compliance. They didn't really mean it. There's a penalty to be paid in China today if you go against the party line, and the line now is egalitarianism, and this means really an assault on the private sector. And that's really where the problem comes from, because so much of China's inequality is baked into the system. It's baked into their taxation system. But it's the billionaires, the private sector, that are paying the price for this.
Well, okay. So, every time you and I talk, I think about, President Xi and what the end game is, because on one hand, right, they do long-term planning. China does as a country, as a nation, as a government, and they have been very open about wanting to dominate, major industrial sectors. At the same time, some of what they are doing feels like they're pushing back on the ability to do that in capitalism. Can they do both? Can they be leaders in industries and at the same
point?
Okay.
It's a really good point, Carol. I mean, China is playing by a different set of rules here. This is not capitalism where the purpose of a corporation is to maximize shareholder value. What companies in China are being told now is that your purpose in life is to fall into line and support government policy when it comes to technology, when it comes to the economy, and also social and political objectives. So we saw that today with this announcement that online gaming companies were going to have to drastically limit the number of hours that kids spend in front of their screens, 3 hours a week. This is a bid to fix a social problem in China, and companies are expected to take the lead. And it doesn't matter the impact on their profits, or indeed, and especially not, the impact on foreign investors. It's simply peripheral.
So are they putting at risk their ability to be a global leader going forward, one that's respected by global investors, global business? I'm trying to understand kind of what the end game. I mean, I understand the idea of spreading out the wealth and making sure that there's no upheavals within China itself, but I do wonder about what the future role is then as a nation.
Yeah, well, when you're the Communist Party, every nail looks like it needs a hammer, and they're going about this in a really draconian, peremptory way. I mean, the problems that they're addressing in China are similar to problems elsewhere in the world. Right. I mean, inequality in China is about the same as inequality in the United States. The difference is that the way they've decided to go about this is to scapegoat the country's leading entrepreneurs, including Jack Ma, of course, who is the biggest and the most powerful of them all.
So, I don't know. I know I ask you this a lot because I do think about, so do we have an idea of in 5 years, does this create a more comprehensive, wealthier society in China, and one that also is playing equally on the global stage with the EU as well as the US?
I think we're going to have to see how this campaign plays out, and whether or not what we're seeing is just the first wave, the attention-getting actions of fining film actresses as they've just done for tax evasion, or bringing down Jack Ma a peg or two. What you really need to look out for now is changes in public policy that will really have an impact in achieving President Xi Jinping's mission, which is to make China a more equal society. That will mean massive investment in Chinese education. It is woefully underfunded in rural areas. It will mean investment in healthcare. It will mean an overhaul of the fiscal system, structural changes, which could be very painful and could, in the short term, impact Chinese growth.
Well, it's a fascinating column again, Andy, and really glad that we got to check in with you about it. Andy Brown, he is our Bloomberg New Economy Editorial Director. Andy, thank you so much joining us on the phone in New Hampshire, and I highly recommend you check out his column that is on the Bloomberg as well as at Bloomberg.com. All right, you are listening to Bloomberg Radio. Coming up, a conversation with David Rubenstein had with John Paulson, and they talked about a variety of things, including some of the manias and crazes that have made up the financial markets here in 2021. So you'll hear some of that conversation. And then a little bit later on, we'll check in once again with Dave Wilson for his chart of the day. In the meantime, let's get another update on world and national news. Let's head to D.C. and Nancy Lyons. Hey, Nance.
Hey, Carol. Well, Ida is still a powerful storm with torrential rains as it moves over Louisiana and heads for Tennessee. As a hurricane, Ida pounded New Orleans as a Category 4 storm and left scores of residents trapped by floodwaters and pleading to be rescued. Louisiana Governor John Bel Edwards says it will take time to recover.
this is going to be a very long ordeal in terms of getting everything cleaned up and certainly getting everything repaired. And please understand, we're going to be in life-saving mode, doing search and rescue as a first order of priority.
Bell Edwards says Ida was just as bad as advertised. Well, it's a wildfire that's causing evacuations around Lake Tahoe, the resort region straddling California and Nevada. People have been told to flee from a long section of the lake shoreline as a huge forest fire moves dangerously close. Well, the clock is ticking toward the deadline for evacuating Afghanistan, with as many as 28 evacuation flights departing in the past 24 hours, despite a rocket attack by the Islamic State.
General Hank Taylor said countermeasures by U.S. defenders rendered the rockets ineffective.
We assessed that 5 rockets were in the air. 3 landed off the airfield, were no effect, and CRAM was able to effect and thwart the attack of one, and the other rocket landed with no effect to the mission or any danger to our personnel.
General Taylor said the explosives carried by the truck that was targeted earlier when it was en route to the airport created a secondary explosion, proving its deadly mission. And the airport is still in danger, he said. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You are listening to Bloomberg Business Week. Joining me once again is Charlie Pella. And Charlie, I don't know if you were on the subway last night or maybe into the wee hours. I know you like to party on the weekends. But if you did, you might have gotten caught in a huge, massive snafu when it comes to New York City subways.
And indeed, when you say huge, we're talking a 5-hour snafu there. Yes, I like to party on the weekends, but I tell you, leaving at 8:30, that's a little early to be leaving a party on a Sunday night before work, at least for me. But listen, this messed up some of the most used lines in the city. They're all well used, but typically these are the numbered lines here, the 1, 2, 3, 4, 5, 6, 7, also the L lines. There were even 5 trains that were stopped in tunnels between stations. That caused hundreds of people to evacuate, many of them not waiting for authorities, taking matters into their own hands. Dangerous, dangerous, dangerous. And today we've got the governor, Kathy Hochul, calling for a review of what's being described as a system breakdown.
Yeah, I would say so. There were 2 power plants and generators that went offline, according to the governor. And when the MTA tried to resume normal service, quote, an unprecedented surge caused the subway to lose signals and communication to its command center, as well as among trains stopping traffic. So we know that for so many New Yorkers to get in and around getting in and around New York City, I mean, you need the subway trains. I mean, ridership we know is way down because of the pandemic, but nonetheless, it impacts a lot of people typically.
Indeed. Quickest, cheapest, fastest way to go. But, rightfully so. Everybody's asking for answers as to what happened here. Apparently, Con Ed reported losing a feeder, quote, for a short period of time, a feeder cable just before 8:30 Sunday night. And that resulted in a voltage dip across New York City.
Yeah, and I guess at one point they thought it might have been a manhole fire Sunday night that was initially thought to be connected to the breakdown, but that appears to be unrelated, so they're continuing to check it out. The other story I wanted to do, I'll just tee it up because we're going to talk about crypto coming up. Tennis superstar Naomi Osaka, she is one of the ever-expanding list of the crypto curious, apparently dabbling a little bit in crypto. We're going to talk a little bit about that in just a moment, right here on Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. U.S. stocks trading at a record. It is a mixed Monday, however. The Dow lower, S&P, NASDAQ both advancing. Apple shares at a record. Lots going on. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is. We welcome back Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading well today. The S&P is currently up 26 points. NASDAQ is up 157. Like you said, Apple is trading at a record, but the Dow is lower by 9 points. The U.S. 10-year yield at 1.29%. Gold is down 7, and transports fall 15. Among the main 11 S&P sectors, leaders were consumer discretionary and tech. Financials were under pressure. And leaders to the upside in the Dow, Apple and Home Depot, while American Express, Goldman Sachs, and Boeing led to the downside. In other news, PayPal is exploring a stock trading platform for U.S. customers that sent shares of Robinhood lower, and Affirm Holdings soared as much as 49% after its deal with Amazon. Wrapping things up, Zoom Video reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
What we have to make sure we do as the economy recovers is look at the data kind of broken down a bit.
These funds are becoming more and more expensive. You're looking at $15 billion for their entry level.
There have been waves of immigration that have faced a lot of resistance.
There's a lot of color behind the scenes and a great untold story.
How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win.
The Big Take on Bloomberg Radio.
Well, ever since famed hedge fund manager John Paulson bet against the U.S. home market last decade, reaping $20 billion for himself and his investors, people keep asking him about the next big trade. In an interview for the upcoming episode of Bloomberg Wealth, Paulson tells David Rubenstein why he doesn't like SPACs and why crypto is worthless. It is today's Bloomberg Big Take.
I don't think it's quite a bubble, but it's clearly shows elements of a frothy market. There's just too much liquidity. So I would say the SPAC market is overvalued, that people that invest in SPACs in general, on average, will be a losing proposition.
Okay, what about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies. And I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, when we look for the subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of Treasury. So you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, went from 5,000 to 45,000, I would be wiped out on the short side. So it's just too volatile to short.
So if somebody came to you and said, John, I just got $100,000, what should I do with $100,000? What would you tell them?
Well, I always say the best investment for an individual, an average individual, is to buy their own home. So if you took that $100,000, put 10% down, get a $900,000 mortgage or whatever, you can buy a home for $1 million. And it just reported that home prices were up 20% in the last month. So if you bought a home for $1 million with $100,000 down, the home was up 20%, that's $200,000. On a $100,000 investment, you'd be up 200%. And over time, essentially that's what's going to happen. The longer you wait, the more the house is going to appreciate and the greater return you'll have on your equity investment. So I think the single best investment for anyone with that type of money would be to buy their own house or apartment.
And what do you think, for example, you would tell people not to invest in? Is there something you'd say, do not ever invest in X, Y, or Z?
Well, now, I'll have a lot of people that disagree with this, but I would think, you know, you shouldn't invest in cryptocurrencies. Ultimately, I think cryptocurrencies, regardless of where they're trading today, whether they go up from here or down, will eventually prove to be worthless. So there is no value to them. It's just a question of supply and demand. And once the exuberance wears off or liquidity dries up, these will go to zero. So I wouldn't recommend anyone invest in cryptocurrency.
And that voice, of course, famed hedge fund manager John Paulson, speaking with David Rubenstein. You can watch the entire interview Tuesday, tomorrow at 9 p.m. Wall Street time on Bloomberg Wealth with David Rubenstein, exclusively on Bloomberg TV. Keep in mind Paulson's record in the last few years, since that greatest trade where he made that bet on home mortgages back just before the financial crisis. It's been a bit mixed. He turned his hedge fund firm into a family office last year after assets dropped to about $9 billion in 2019 from a peak of $38 billion in 2011, and he found himself managing mostly his own money. And he talks a little bit, too, about the actual business of managing money, what he likes, what he doesn't. So I highly recommend you check out that interview. Again, that's Tuesday, 9 p.m. Wall Street time, Bloomberg Wealth with David Rubenstein, talking with John Paulson exclusively on Bloomberg TV. In the meantime, John Paulson maybe not so keen on crypto. You certainly heard that from him. But we did mention, Charlie and I just briefly, a story on the Bloomberg among our most read that tennis superstar Naomi Osaka joining the A-listers dabbling in crypto. Apparently, the growing rage around cryptocurrencies has captured the attention of the defending U.S. Open champion, who's been exploring where she can invest in the space. Part of her interest was brought on by all the noise around Dogecoin, the digital token that became famous for being the first meme coin to start out as a joke. And here's a little bit of a quote. I was actually just talking with my agent about cryptocurrencies, she said in an interview last week. This is a quote. I know that online everything is getting bigger. I remember reading about Dogecoin. There's going to be something new and interesting that's going to pop up. Osaka said the continuous stream of conversations around Dogecoin, especially on our Twitter feed, stoked her interest even before her agent approached her with the idea to invest. You can read more of that story. That, too, you can find at Bloomberg.com. Coming up, Dave Wilson. He watches the markets for us. He's going to be back with his chart of the day and his song of the day, and then we'll count you down to the closing bell on this Monday. I'm Carol Masser. This is Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you're listening to Bloomberg Business Week on this Monday, August 30th, 2021, on a day when we're seeing stocks rally, certainly the S&P and the NASDAQ in particular. Coming up, we've got the chart of the day and the song of the day. Dave Wilson getting settled in our Interactive Brokers studio. I'll bring him in just a moment. Right now, though, let's bring in Charlie Pellet. And Charlie, just about half an hour to go here.
Indeed, and we've got stocks trading mixed. A mixed Monday with the Dow lower, S&P, NASDAQ. They're both at records. Do want to begin with a developing story, and that is Gary Gensler, the SEC chair, says banning payment for order is, quote, on the table. This according to Barron's.com. Stocks are being led higher by some of the world's largest technology companies. Apple, for example, market cap there $2.5 trillion at a record. Shares of Apple, they are advancing. Apple up now by 3.1%. Stocks are higher with the S&P up 24, up 0.5%. NASDAQ up 144, up by 1%. The Dow lower by 21 points, down 0.1%. NASDAQ 100 index up 1.2%. Russell 2000 down now by 0.4%. 10-years up 7/32. 10-year yield 1.28%. Spot gold down 0.4%. 18.11 the ounce, while West Texas Intermediate crude up 0.5%. 69.09 a barrel. South Africa has told the World Health Organization that a new variant of the coronavirus may be circulating in the country. That according to a report from the news website New Frame. In the meantime, Dr. Joshua Sharfstein, Vice Dean of the Johns Hopkins Bloomberg School of Public Health, says with schools reopening across America, we are moving into a new phase.
I think the first phase of this pandemic was about older adults and people with chronic illness. The second phase is about trying to get young people vaccinated, meaning young adults. And I'm thinking it's quite possible that this next phase for the United States is going to be a lot about school, protecting children, and all of us thinking about what we can do to make sure that that's successful.
Dr. Sharfstein with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we follow for you, it is a mixed day. We do have Pfizer shares up by about 0.2%. Its German partner, its ADRs down 3.2%. AstraZeneca up 0.1%. Those are the ADRs. Moderna, based in Cambridge, down 3.1%. J&J Johnson & Johnson up 0.5%. Recapping stocks mixed, S&P at a record up 23, up 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much. You are up to date when it comes to the markets, thanks to Charlie. All right, you are listening to Bloomberg Business Week, and this is Bloomberg.
Get back to where you once belonged. Get back.
All right, so we all know who that is. We're going to let it play underneath while I just do a quick headline, because the CDC's Advisory Committee on Immunization Practices voting unanimously to recommend the Pfizer shot. So that is just crossing the Bloomberg. And just wanted to bring you a quick check on Pfizer shares and just seeing if we're seeing any reaction. And the stock is just up a hair, just up about 0.25%. In the meantime, you know that song. It's, of course, the Beatles. Dave Wilson joining me in our Interactive Brokers studio. Get back.
Indeed.
Indeed.
So it does fit with the theme of the chart because we're talking about dividends getting back. At least that's what Nick Colas
Feels like they never go away.
Well, they don't go away, but the question is, are they what they were before the pandemic hit? Because, a lot of companies either reduced their payouts or eliminated them entirely to conserve cash. And so Nick Colas over at Data Direct Research was asking the question, well, where are investors the most confident that those dividends will be restored to pre-pandemic levels? And the way he answered the question was to look at some exchange-traded funds that track stock indexes, S&P 500 and international gauges from MSCI. So when you run the numbers as he did, you find out The S&P 500 with a dividend yield of about 1.3%, only 8% away from where it was at the end of 2019. So you go through other indexes. You see MSCI EAFE, which tracks developed markets in Europe and Asia, 17% away. You turn to the MSCI All Country World Index, which tracks developed and emerging markets. It's really their broadest gauge. It's 29%. Then you move to that index, the All Country World, and take out the U.S., and you're at 40%. And finally, you go to the MSCI Emerging Markets Index. Now think about everything that's been happening in China the last few months, the way that those companies, which dominate that emerging market gauge, have been sort of reined in by the government. And you are talking about a gap in terms of dividend yield, 60%.
That's a big gap.
You're not kidding. So it's a long way from what it was. And, Colas makes the point. It's rightly represents the reduced earnings power from Chinese companies. I'm quoting from his research. So, it just goes to show you.
So that emerging markets includes all of Chinese stocks, correct?
That's right.
I always forget, as developed as that country has become, it's still considered a developing market.
Yeah, and in fact, they dominate that index. I mean, they have the biggest share, even now, in terms of country representation. So, it does kind of show you kind of where we are around the world, and the U.S. is in a very different place than other countries. So if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
It's kind of a Tina play there. There's no alternative. It's stocks, and it's really U.S. stocks specifically.
Oh, yeah.
All right, so Dave, coming up, you've also got your stock of the day. What can we look forward to?
This is a company called Aterian. What they do is that they sell products for other companies. They have their own products, but they're really sort of a marketing organization. Been around for a few years. The ticker is ATER. Now, you take a look at the stock chart, you got to ask yourself, was this company a meme stock? It sure looks that way, because in mid-February, it was at about $49 a share after having, at last November, being, about 7, so roughly sevenfold increase in the space of 3.5 months. And then it gave back that entire gain and then some, got all the way down to about $3 a share last week. So how does Aterian respond? They take a page out of the AMC Entertainment playbook and start offering shareholder perks.
Oh, my goodness.
Discounts on best-selling products from Aterian's own websites or from Amazon. And so what does that get them? A bit of a rebound in the stock. Now, some of that gain has been given back. At the moment, the shares are up more than 8%, but at one point today, they were higher by 48%.
Right, and still down almost 62% on the day, and percentage of float shorted is about 28%, so it fits right into that meme category.
You bet.
All right, find Dave's Stock of the Day, 4:15 p.m. Wall Street time. Find it on Facebook, LinkedIn, and on Twitter at The One Dave. Dave, thank you. All right, let's get back to Nancy Lyons, check on world and national news. Hey, Nance.
Hey, Carol. New Orleans residents are being urged to stay indoors as fires burn out of control and more than 1 million homes and businesses remain without power. This a day after Ida rolled ashore as a powerful Category 4 hurricane. Louisiana Governor John Bel Edwards says the storm was just as bad as advertised, but could have been worse.
For the most part, all of our levees performed extremely well, especially the federal levees. But at the end of the day, the storm surge, the rain, the wind, all had devastating impacts across southeast Louisiana.
Bel Edwards says thousands of boats are involved in water rescues. Analysts are already tallying up the damage and estimate Ida could cost insurers at least $15 billion. The entire city of South Lake Tahoe, California, is under orders to evacuate, forcing thousands to flee as a wildfire races toward the lake. The city has about 22,000 residents, but swells in the summer due to tourists looking to hike, water ski, and gamble in nearby casinos. The huge Caldor fire has grown to more than 277 square miles. Florida Governor Ron DeSantis is vowing to continue his fight after a judge ruled that he overstepped his authority with his ban on mandatory face masks in schools.
It'll be appealed. We'll end up getting it back, and I think at the end of the day, ultimately, we're just trying to stand with the parents.
DeSantis says parents, not school boards, should decide if their kids should wear a mask. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar joining me once again, Charlie Pella. And Charlie, we just did have a headline cross the Bloomberg terminal. Pfizer and BioNTech's shot that gained regulatory approval last week was recommended by a U.S. vaccine advisory panel in a move expected to bolster efforts to tame a renewed surge in infections fueled by the Delta variant. So we're talking about the CDC and their advisory committee on immunization practices. 14 members voted unanimously in favor of the two-dose regimen in people 16 and older. That's happened just moments ago. The recommendation still needs a final sign-off from the CDC director, Rochelle Walensky.
Indeed. And again, looking at the stock, you alluded to this a couple of minutes ago. Really little change right now in Pfizer shares, up now by 0.25%. BioNTech, its German partner, does remain on the minus side now, down by about 3.9%. But the Pfizer-BioNTech shot's approval by the FDA is the first for a COVID vaccine in the U.S., coming as the Biden administration tries to control the spread of the highly transmissible Delta variant.
Right, and we heard earlier from a member of the medical community when we checked in kind of our daily check. We talked to Dr. Lelu Fayanju over at Oak Street Health, and he said I think it was about 52% of Americans have gotten shots here. So obviously we haven't gotten to herd immunity. So we'll see whether or not this move, as we see the FDA, making this approval process, whether it really boosts vaccine acceptance in those who maybe were hesitant to get it, Charlie.
Indeed, and I heard you say just a couple of minutes ago that it really, we did see a pendulum shift when we first got the initial approval there, with many large employers, schools, state and local governments now putting vaccine requirements in place in the wake of the approval. So you could argue that was very much a game changer. But again, recapping here on the stock, Pfizer now up by 0.2, BioNTech down 4%.
And again, the headline that we were probably anticipating, because we knew these officials were meeting, Pfizer and BioNTech shot gaining regulatory approval last week was recommended by U.S. vaccine advisors in a move expected to bolster efforts for people to get that vaccine. Thanks, Charlie. This is Bloomberg.
hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Late day fade for the Dow, now down by 42 points, drop there of 0.1%. S&P, NASDAQ, both higher, both trading at records, and we're roughly 13 minutes away from the latest numbers out of Zoom Video Communications, a lockdown darling. Zoom shares up now by 1.9%. We'll pass along those numbers as we get them. Stocks are being led higher by some of the world's largest technology companies. Case in point, Apple trading at a record. Shares of Apple up now by 3.2%. We've got the S&P up 22, up 0.5%. The Dow slumping 41, down 0.1. NASDAQ up 147, up by 1%. And again, the S&P year-to-date up by 20.6%. 10 years up 9/32, 10-year yield 1.27%. Spot gold is down 0.4%, 18.10 the ounce. And a move higher for crude. West Texas Intermediate up 0.4%, 69.01 a barrel. Again, recapping, S&P climbing towards its 12th record this month. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
And just about 10 minutes left in today's trading session. It is time for the drive to the close. Once again, joining us is Dan Pipitone, co-founder Trade Zero America, joining us on the phone in Brooklyn. Dan, how are you?
Fantastic. How are you?
Doing okay. It's been a busy summer. We have talked, though, on some days about a slowdown in trading activity in terms of volume. What have you been seeing?
Yeah, we've definitely seen some slowness. It's weird. Coming into the summer, June, July, the first half of July, definitely tracking well above last year. But once we hit the middle of July, it was a significant slowdown where we're starting seeing things pick back up towards the middle of last week. We've seen, a bunch of kids get back to school in Florida, some of the southern states, and as the Mondays progress on into September, we're seeing more of that. So we have a lot of anticipation built up for September, where everyone is quote unquote back to work, and we're really excited for what the fall has to bring as it relates to volume and attention to the markets.
Well, and what are the trends that you're seeing in terms of particular names? I mean, meme stocks, it felt like came alive again last week. AMC and GameStop among them. Support.com on Friday, up almost 350% since August 18th, up nearly 200% last week alone. What activity you're seeing in the so-called meme stocks?
Yeah, it's interesting because obviously January, February, we saw kind of the advent of this and real lots of attention. We saw the meme stocks kind of pop their heads up, I want to say about a month ago, with AMC, GameStop popping back up. And we're seeing that continue. Where it's kind of like a game of whack-a-mole. Every day investors are trying to figure out what the next meme is going to be. As you mentioned, support.com seems to be the latest. Actually, we saw a little bit of Robinhood meme action a few days after it IPO'd. While the overall markets have slowed down a bit, the activity in all of these meme stocks is, continues to thrive.
And it's still big among retails, because the retail investor. I asked because last week we saw some tracking that said, it had kind of shifted more to institutional investors getting in on that play.
I think, listen, everyone's in on it. The
Why not, right?
intelligence out there is, yeah. And how funny is it where, for the longest, for the vast majority of my career, it was always institutional, with retail and the average investor being sort of the last to know, where now it's kind of been, turned on its side, where everyone is trying to figure out where retail's next attention is going to be and then hop on that bandwagon.
So talk to us about some of the breakdowns that you do, Dan, in terms of tracking volume, tracking trades. What are the top 10 shorts above $10?
So support.com you mentioned, this is coming into last week, over 73,000 trades in that name. AMC, again, TCAT, which is an NFT play, rounded out by Noro, RGC, SABA. These are some names that people, have probably heard of before. These are stocks that have been, super volatile for a good part of the summer and a good part of this year. But those are the top stocks above $10 that we've seen activity in, and then the activity and the action continues today into SPRT and RNXT is another one, another high flyer today that's being actively shorted.
What about those top 10 shorts below $10?
So below 10, we are seeing these are obviously less household names. TCAT, interestingly, started out below 10 and now is trading above. And you have symbols like VBOS, ADTX, BPTH, which is another bellwether as it relates to the small cap gappers. This is a stock that's been in play and in favor with our traders for quite some time.
When you look at the accounts, I mean, what's kind of cool about talking to you is you can look at the accounts in aggregate and look at the trends. Are most accounts up? Are most accounts down? Can you give us any indication?
Coming into the summer, people were just really hitting the cover off the ball. I think as we've seen kind of coordinated with some of the slowdown in activity and volume, I don't know if it's hand in hand with losses preceding the slowdown or the slowdown preceding the losses. But we've seen folks really treading water for the last 6 months. Again, that tide has started to change a bit in the last 3 or 4 trading days. Again, positioned for September, we're really excited about where we are and how we've weathered the summer in terms of some of the slowdown. While we've continued to grow, we're excited to be hitting the fall where everyone is kind of back in their seats.
Dan, you guys have been around. TradeZero has been around. I think you were founded back in 2015. So 6 years. You've seen some different market trends. What do you make, especially of the impact of the Reddit meme stock frenzy that blew up the markets and trading in a few names? But we continue to see that trade. Certainly you are seeing it in terms of some of the moves and the flows and the trends. But what's changed in those, 5-6 years since you've been doing this?
I think, to your point, Reddit, the democratization of information. When one person knows it, they have the ability to post it and share that information with others. So, the ability for people, for investors to communicate and to share like ideas and to debate those that they may not share. I think the perpetuation of these meme stocks really exists because of people's ability to share information amongst themselves. Without the connectivity, without the social aspects of some of the places that people hang out on the internet, I don't think we see this, and we definitely don't see it to the degree that we've seen it. So, there have been a bunch of factors. Retail investing in the last couple of years, between the onset of commission-free trading, the democratization of ideas and idea generation, as well as the ease of onboarding, the ease of funding accounts. All of these things have made, sort of eliminated a lot of those barriers to entry for the retail investor and made the markets and investing more approachable, where it wasn't just for, the rich or the 1%. So I think all these things have played a part, and the internet as a vehicle for information sharing has really helped perpetuate that.
Hey, we love talking with you about the meme stocks and some of these interesting names that have gotten a lot of attention. They don't sell for a lot of money. What about any kind of trends that you're seeing among the bigger names, those that many would argue have a lot of fundamentals to trade on? Are you seeing any interesting trades there and any interesting trends?
We're seeing, obviously, today Apple is really, flying high. We've seen, there's been lots of investor attention in some of the larger cap names like Tesla, Apple.
To the upside or a little bit of both?
To the upside. And I think that we are now seeing a little bit of a rotation back into big tech, back into some of the bigger technology names that maybe were out of favor towards the beginning of the summer.
That's interesting. What, in terms of among the big tech or the well-known names, what are you seeing that's being sold? Just got about 30 seconds.
Palantir, a big one being sold. AMD, another one being sold. We've seen people rotate out of AMD and into Intel. What others? Facebook. another one. For some reason, we're seeing a bunch of people trade it on the short side as well.
All right. Good to know. I love talking about these trends with you. Hey, Dan, thank you so much. Enjoy the rest of the summer. Dan Pipitone, he's co-founder of Trade Zero America, joining us on the phone from Brooklyn. We do that with just a few minutes left in the trading session, coming off our highs of the day on the S&P, but still up about 20 points, excuse me. Dow is still showing a decline of about 51 here, and the NASDAQ really outperforming on a percentage basis. It is up almost 0.9%. Coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell. It's live on Bloomberg Radio, Bloomberg TV, and on YouTube. We are counting you down to the closing bell on this Monday, August 30th.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs, counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast. We're joined right now by Carol Massar, bringing together our Bloomberg television, radio, and YouTube audiences. And Carol, it's an interesting day here. You got an S&P 500 headed for a record high. You have cyclicals kind of moving in the opposite direction. There seems to be a little bit of a tinge of defensiveness.
Yeah, a tinge of defensiveness. And then there's also the buy-in, once again, to big technology. Just check out Apple, over a $2.5 trillion market cap. We've been talking about this a lot at Bloomberg. It's up about 3%. Or Dave Wilson pointing out that it gained $1.5 trillion in market cap in less than 18 months. So talk about quite a run when it comes to Apple, Caroline.
Yeah, meanwhile, quite the flip reverse when you're looking at the big ones keep getting bigger. The small caps, well, out of favor at the moment. I think we're seeing them the most shorted for the Russell 2000. We've seen speculative trades betting against small caps in 2 years. People just not buying this reopening story, Taylor.
You know, Romaine, my favorite part of the morning is getting Bob Dole on the program. $4,200 price target. We say, well, that doesn't cut it. We're at a $45.29. So he goes, all right, I'll boost it up to $4,500. That just shows how strategists are just desperate to keep up with this bull market that, frankly, doesn't show like any signs of stopping.
Yeah, I mean, you got Apple up 3%, you have Amazon up 2%, Facebook higher as well, and then even some of those kind of second-tier tech companies, your Snaps and Zooms, they're also doing well here today here. But then, like I said, you look at the kind of stocks you would think would be benefiting from sort of an improving economy here, and they're not really being favored here. You're also seeing a lot of weakness, of course, in the financials here, largely because of what's happening in the yield curve and some interesting data here on credit card spending. So I guess you sort all this together, and here's what you get. You get a Dow Jones Industrial Average that's going to finish down on the day, down about 0.1%, 56 points. The S&P 500 is going to finish higher on the day, up about 0.4%, or 19 points. That's a record high. And the NASDAQ Composite, as well as the NASDAQ 100, also going to finish higher here at a record high, 136 points on the composite, up 0.9%. And then you flip up the board and you take a look at that Russell 2000 down here, down about 4 to 0.5% here on the day, 2265 and change here on a day where you saw a lot of those small cap discretionary names and some of those cyclical material names weaken.
All right, and one of the things that really caught my attention is just following the NASDAQ Golden Dragon China Index. It was up as much as 1% today, ending the day up about 0.7%. That despite headlines, difficult headlines continuing to come out of Beijing. We're going to talk about this a little bit later on. That Dragon Index is still down, about 47% from its high back in February. But I continue to watch the Chinese market, so important to the global economy, but interesting to see constantly more and more, Taylor, crackdowns on different industries there.
And you continue to see within the U.S. equity market as well, right? What are some of those ripple effects? And indeed, it is the media, right? The technology and the hardware and the equipment space that are some of the big outperformers for the radio audience. We take a look at the sector winners, the sector losers. That's up anywhere from 1 to 2.5%. Otherwise, it's pretty much a bond story. You had yields actually falling on the day. So, Carol, you're seeing a rotation sort of out of that reflationary trade. It's transportation, it's energy. Those are the laggards off on the day, off about 1%. It's also dividend financials and banks. With bond yields falling, you're back below 130 on the 10-year. Some of that unwind, you're seeing it through today.
All right, going to talk about some of the movers in today's session. Check out Affirm Holdings. Oh my God, up closing near its highs, up about 47% today, entering a partnership with Amazon to help customers finance large purchases made on Amazon, essentially pay as you go, break it down into pieces. Many on Wall Street saying that Amazon deal is a game changer. Our own Bloomberg Intelligence team writing, if Affirm's service captures just 1% of Amazon.com's North American sales, it could add over $900 million or 10% of revenue. Apple Apple, we talked about it, hitting an all-time high today. Market cap surpassing $2.5 trillion. That stock was up about 3% at the close. And while talking about Apple, did you see Global Star, ticker GSAT? That stock was up 64%, soaring on speculation that the iPhone 13 will be able to use satellite communications and that Global Star could be a likely partner. And then just got to mention Robinhood.
Do you remember those old satellite phones back in the day? Those gigantic ones. And you had to do that. Yeah, those things never worked. I mean, you know, I guess if you're trapped in Antarctica or something. What's going on with Robinhood here? Is this real, this Gary Gensler interview?
I don't know.
What's happening?
Well, he gave it to Barron's, and he talked about saying that a full ban of payment for order flow is on the table. We know that's so important to them. And it was kind of a double whammy today, because you also had PayPal coming out and saying that they're going to explore stock trading on their platform for you investors.
And we should point out, like Virtu, Schwab, also down, Interactive Brokers. It'll be interesting to see whether there's follow through on that.
Yeah, exactly. Robinhood down about 7% today, guys.
Payment for order flow. It manages to pay the bills for a few other companies as well as Robinhood. Meanwhile, what's also on moving when you're looking across asset, I'm going to start with FX, because we're seeing actually the dollar ending the day on the upside, up about 0.2% on the US dollar, as we see this cautious tone to the market. But it's been spoiled about. We've got the end of the month, some fund flows happening, perhaps some rebalancing going on. But overall, we are seeing a little bit of a search for safety with the US dollar. We see the krone, though, outperform. Norwegian krone outperform once again. That on the back of perhaps oil pushing slightly higher. So Norwegian krone up 0.5%, your best performing G10 currency. That, as we see the likes of, sort of as we try to digest some of the ramifications, what happened over the course of the weekend, the Hurricane Ida, what it's done to the Gulf of Mexico, and having to take some oil refineries offline. Gas oil, of course, has been a key outperformer, up percent. We've seen gasoline rising as well, at one point the highest since 2018, as we worry about what the production ramifications are from that particular hurricane. We see, of course, thoughts to the families have been affected there, but Brent crude ending the day up 0.7%, $73 is where we trade. And overall, we see money moving into bonds around the world, Taylor. I can see Australian bonds get a bid, Japanese bonds get a bid, Italian yields also falling some 2.4 basis points. So clearly money moving into the haven that is bonds.
You see it in full faith and credit. Here in the U.S., yields were higher when we started the day. We migrate downward. We're now down 3 basis points on 5s, 3 basis points on 10s, 3 basis points on 30s. You're back below a 130 on the 10-year, back below 190 on the 30-year. So you're really seeing sort of a flight to quality, this safe haven trade. And really, what is this telling us about the economy and really that theme, right? If there is no alternative, how do you buy a bond at these levels? I said that my favorite interview of the day was Bob Dole. Here was another quote that we had from him. Take a listen to what he had to say.
A good economy means good earnings, and so the path of least resistance has been and likely will continue to be to the upside. That does not mean there aren't flies in the ointment. I can give you a list, but the path of least resistance is still higher.
Bob Dole there, of course, Romaine, the path of least resistance is higher.
Yeah, and just to pivot here, Zoom earnings coming out right now. There are two cute numbers here. They look like they beat on the top line, $1.36 on adjusted EPS versus a street estimate of $1.16. Revenue coming in at $1.02 billion. The street was looking for $9.90 on average. But here's your forecast here. 3Q revenue, they're basically giving a range of roughly about $1.02 billion. That's basically in line with what the street was looking for. Similar story on EPS, 107 to 108. The street was looking for 108, and their full year EPS, 475 to 479. The street was looking for 456 to 461. Still looking for some of the actual customer numbers, as that's what a lot of people are going to pay attention here too with Zoom. Of course, we're talking about one of the high flyer stocks here, Carol. Of course, what was it up, like 400% last year? It's basically been range bound for the past 5 or 6 months.
I'm looking at their customer metrics. Drivers of total revenue included acquiring new customers, expanding across existing customers. At the end of the second quarter for fiscal year 2022, they had 2,278 customers contributing to more than $100,000 in 12-month revenue, up approximately 131%. So overall, approximately 504,000. So 504,900 customers with more than 10 employees, up approximately 36%. And overall, they're seeing strength. And they talk about the product pipeline still growing, Romaine.
Well, what's the growth here? I mean, you're talking about last year, in the last fiscal year, you had triple-digit growth on revenue. That's where it's dropped to 54% in this most recent quarter. And most analysts now are guiding down here for like 30, maybe 20% growth rate going forward here. I guess when you look at the valuations, does that type of growth rate justify 330 on your screen?
You know, it's interesting is it was just Morgan Stanley that became bullish, was it last week, on this stock for the first time ahead of earnings. And they said that, you know, we shouldn't be so concerned about it just being kind of a pre-pandemic play. But interesting to see that the stock down about 3.9%. It's rallied about 18% from its early May low, but it's been bouncing around
But I have a question, Carol. I mean, if you're gonna, if we do get to the end of this pandemic here, and you have the option to go out and have drinks with somebody or do that Zoom drink thing that I always hated, like, what are you going to choose?
I didn't do the Zoom drink, but I still did. I did Zoom over the weekend with some family members.
We did invite you. We did invite you to our team Zoom drinks, cocktails in the real dark days of December, but Romaine had drinking alone to do.
Romaine, just to answer your question, Morgan Stanley saying it is the enterprise customer. It won't maybe be the personal customer that we talk about, that how much of that enterprise customer, as Caroline said, that enterprise customer, that revenue is up 131% from the same quarter last year. And that might be where you get really some of that B2B business.
Yeah, but investors don't care right now because the stock's down about 5% in the after hours. So we'll be watching Zoom in the Tuesday trade. All right, we got to run. That's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube of the markets. We'll be back same time, same place tomorrow.
That's right, Carol. Let's continue to unpack, well, what have been comments not only about the corporates, but also what's happening in terms of the overall markets right now. We've been looking at bond yields coming lower. This on the back, of course, of the move that we saw in the markets, whether it comes to the dollar, that, of course, was lower last week, or indeed bond yields that we kept an eye on, post the Fed Chair Powell's remarks at Jackson Hole. For our Bloomberg Television, radio, and YouTube audiences, we welcome now Bill Dudley. He's, of course, former president of the Federal Reserve Bank of New York, Bloomberg opinion columnist, and senior advisor to Bloomberg Economics. He is also senior research scholar at Princeton University's Center for Economic Policy Studies. Bill, it is always great to have you on our network. And you wrote a thought leadership piece once again today, really focusing in on how what we're hearing from Fed Chair Powell now is a focus on jobs. It trains our eyes towards non-farm payrolls on Friday, all the more important, Bill.
Well, he basically said that the goal of the monetary policy is to drive the economy to full employment, to get as many people employed as possible, because that will help low and moderate income households who are less advantaged and less attached to the labor market. He also spent quite a bit of time on his speech on inflation, but basically was reassuring there, arguing that the inflation spike that we have seen is likely to be transitory. And if the Fed were wrong about that, the Federal Reserve would respond as appropriate. So the market reaction was quite positive to his speech. Basically, the Fed is going to let the economy run. Inflation is not going to be a problem in the Fed's view, but the Fed's not ignoring that either.
Yeah, they're not ignoring that, and he basically made that clear. But I think there are still some people, Bill, who are, I guess, maybe just a little, not necessarily uncomfortable, just a little, I guess, reticent here about what sort of gets us to maximum employment. How far do you have to let inflation go to get us there, particularly because we really don't know. I mean, this is basically a new mandate or new communication of what the mandate is. And I guess people are just trying to put some sort of metric there that they can measure. And I'm not sure we know, at least those of us who aren't trained economists, know what that is.
Well, Chairman Powell laid out two things that he thinks are important in driving inflation to be more persistent. Number one, pressures on wages, and two, an increase in inflation expectations. On wages, we haven't really seen any meaningful acceleration, so that doesn't seem to be problematic, and he made that point in his speech on Friday. Now, on inflation expectations, they've ticked up a little bit. The Fed staff has a measure that summarizes all the different measures of inflation expectations, and it's running at a level very consistent with the Fed's 2% inflation objective. So the chairman tried to be reassuring on that point.
Could you argue, though, that the bond markets are maybe hinting with the 128 on the 10-year, we're back below 190 on the 30-year, that you have a central bank that may not be as tolerant as we thought of higher inflation, that we won't let it run as hot as we thought?
Well, I think the message of the speech was the fact that he spent so much time focusing on inflation is basically reassuring to the market that the Federal Reserve is looking at this very, very carefully. They're not ignoring it. They're not making a guess that it's going to be okay. They're actually doing the analysis. And so far, their analysis makes them optimistic that the inflation surge that we've seen is going to turn out to be transitory.
Transitory was interesting that we didn't hear quite so much on that turn of phrase at least, Bill. How much, what inflation data points, how long from your perspective do you now view transitory to be? Is it going to be 2 years of slightly above average? You were saying in your piece it seems to be durable goods that of course kicked inflation that much higher. But at what point do we start to see inflation? Because at the moment the lower income feel it in their food, they see it in their crop prices, they feel it in their everyday grocery bill.
I think Chairman Powell's view is it's going to start to turn down from these very high levels relatively soon. We made the point in the speech that durable goods prices have actually been falling for most of the last 25 years. So the 7% increase in durable goods prices we've had over the last year is way outside of historical experience. So I think his view is that also talked about base effects. We had big increases in inflation earlier this year. They're going to fall out of the inflation numbers when we get to next spring and summer.
Yeah.
So I think by next summer, we should definitely see lower inflation numbers. If we don't see them, then the Federal Reserve is going to have to change course.
There's an argument to be made, though, that some of the inflationary pressures we're seeing, specifically as it relates to the supply chain and some of those input costs, that there were some structural issues that were kind of playing out even before the pandemic here, with obviously the trade frictions between the U.S. and China and other sort of, I guess, just geopolitical issues. And I'm wondering how much of that factors into where we are today, and whether that ends up becoming an issue more so than the base effects that we seem to be focusing on.
Well, if you thought U.S. corporations were going to totally rejigger their international supply chains in response to tensions between the U.S. and China, then obviously that friction would take a long time to work its way out, and inflation could be a lot more persistent. You know, one thing I focus on is, where is Apple producing all their iPhones? They're still producing almost all their iPhones in China. So something has not changed that dramatically yet in terms of supply chains, despite all the discussion of that topic.
There are two sort of sticky forces at work. One is sort of the long-term deflationary trends of technology that we've talked about. And on the other hand, we had guests today saying housing prices, wages, once they go up, it's sort of harder to bring those back down. Which of those sort of wins out in that tug of war?
Well, I think wage pressures is really the way the Fed gets a handle on how far they can actually push the unemployment rate down. When they see an acceleration of wages that gets up into the 4% year-over-year rate, then they start to wonder, is that actually consistent with sustainable 2% inflation? Right now, wages are not running at a rate close to a level that would cause you to be worried about an inflation problem, but that's something that they'll definitely be focused on. Last time they were surprised. They pushed the unemployment rate all the way down to 3.5%, well beyond where people thought you could go. And they didn't have a wage inflation problem, and they didn't have a price inflation problem. So we'll see what happens this time.
Bill, of course, as you mentioned in your title, you're now also with Princeton University, and one of your colleagues has been putting forward sort of an article that's created quite a stir over at the symposium over the course of the weekend. Atif Mian, of course, was writing along with some other colleagues from Harvard University and University of Chicago Booth School of Business about how we all thought that the Federal Reserve was in some way helping reinforce inequality. And that's why, of course, we now have this keen-eyed focus on the labor force and ensuring those that have been left behind before now take part. Their thesis is actually that perhaps inequality is forcing the Federal Reserve to keep rates low, that because of the saving rates of the blessed few in the higher income, we're unable to give more ability to cut rates. Is that something that you've seen? Have you read that paper, and what do you make of it?
Yeah, I did read that paper, and I participated in the symposium on Friday. Their point was a very simple one. Is R-star low, the neutral interest rate low, because of demographic trends, or is R-star low because of rising inequality? And they came very strongly on the side that it's low because of rising inequality. Now, the nice thing is, demographic trends are really hard to do anything about. But inequality, you can do something about in terms of tax policy. So if the Biden administration is actually successful in raising taxes on the wealthy and using that money to, say, expand infrastructure spending, that actually has implications for a higher neutral real interest rate for the U.S. economy.
All right, we're speaking here with Bill Dudley, former New York Fed president, of course, now senior research scholar at Princeton University Center for Economic Policy Studies. Bill, on that last point, I am curious here, as to how the Fed then factors that into their general model here with regards to the fiscal spending here, because there is a lot of concern, some of it genuine, some of it, of course, maybe a little flip, about some of the bills being pushed through Congress, and that may add a little bit too much fuel to the fire. And I'm wondering about the timing with regards to the tapering, assuming it starts this year, maybe it ends mid-next year, and then at some point you start talking about a liftoff in rates in 2023. Does fiscal policy, fiscal stimulus, economic spending, does it change that timetable?
It could. It could. I mean, I don't think we know yet what's going to actually happen in Congress with 50 Democratic senators. You know, it's going to be tricky to get something passed, let alone the two pieces of legislation that the Biden administration has proposed. The Fed typically just takes the world as it is and doesn't make a lot of forecast about what piece of legislation will or won't be passed. But you're absolutely right. If the Biden administration gets what they want on fiscal policy, both the infrastructure bill and the bigger package, then fiscal policy will be much more stimulative, and that will probably push the Fed to tighten sooner and by more if that goes through.
Let's talk more about the Biden administration. You would have called him out on July 29th and highlighting, of course, the fact that the central bank is independent, but there are some politics involved, particularly the reappointments, the renominations of the chair. But the column focuses really on the vice chair, given the role within the banking regulation industry and to appease the left, and I'm thinking Warren, you could replace
Bloomberg
Quarles
Economics
with
expects
Brainerd.
the numbers to show
Why is that a
weakness
good
in the
political move,
non-manufacturing
and
economy.
should it be political?
Domestic consumption.
Well, I was just proposing that if you wanted to sort of, be
Bloomberg Economics expects the numbers to show weakness in the non-manufacturing economy.
You reappoint Powell,
Domestic consumption
which
is
makes the
expected to have
progressives a
dipped
little bit unhappy,
after the latest
but then
virus
you
outbreak
make Lyle
and
Brainerd the
subsequent steps to
replacement for
contain
Randy
it.
Quarles, and that
Those
makes
measures were most stringent in late July and early August.
I think,
Even so, the drag is
there's a long
likely to
tradition
continue
of
through much
reappointing
of
chairmen
August.
who've been
On the other
successive
hand,
chair.
the manufacturing
We've had,
PMI is
Ben
expected to
Rankins
point
reappointed,
to
Queen's
stabilizing
Palace
activity.
People have been reappointed by, even as the party power has changed. And so I think there's a,
Bloomberg Economics expects the numbers to show weakness in the non-manufacturing economy.
that he would have
Domestic
support from both
consumption
sides
is
of the aisle.
expected to have dipped after the latest virus outbreak and subsequent steps to contain it. Those measures were most stringent in late July and early August. Even so, the drag is likely to have continued
From
through much
politics
of
to
August.
market functioning, Bill,
On the other
because
hand,
that's
the
also the role of the
manufacturing
Federal
PMI
Reserve.
is expected to point
do you feel
to
the market is
stabilizing
functioning as you
activity.
want to see?
The official
Are there
PMI,
any risks bubbling
official
underneath the
manufacturing
surface? We look
PMI
at the
will
reporting
likely
on the money
remain in
market rates, for
expansion,
example, under
although
pressure. The
edging
reverse
down
repo
to
rate once again
50.1
sort of
from
being pulled lower,
50.4 in July.
and indeed perhaps banks
Bloomberg Economics
having to
says
have a
weakness
bigger
should be
amount that they're
limited
able
thanks to external demand from
have in terms of
China's
counterparty
major
limit. Do you
trading
think
partners.
that at the moment the money market
Bloomberg
is under
Economics
stress,
says
or is it
weakness
fine?
should be limited thanks to
It's
external
doing
demand
reasonably
from
well. I mean, I think
China's
the
major
big issue
trading
that's still
partners.
outstanding is
I'm
what is the
Rosalind
Fed going to
Chin,
do about the
Bloomberg Daybreak
supplementary
Asia.
leverage ratio that basically says that you have to hold so much capital for the assets you hold, regardless of whether the assets are low-risk assets or high-risk assets. And the reason why this is relevant is the Federal Reserve is expanding the amount of assets that banks hold. Every time the Federal Reserve buys a treasury security or a mortgage-backed security, it's adding to reserves in the banking system. It's pushing up the banking system's balance sheet, and that's making the leverage ratio requirement more binding. The Fed has said that they're going to look at this and they're probably going to do something about this, but they haven't done anything about it yet. That's something that the Federal Reserve can fix and should fix going forward.
All right, Bill, we're going to have to leave it there. Really appreciate getting your thoughts here on the program. That's Bill Dudley, of course, former president of the New York Federal Reserve Bank, and, of course, a senior research scholar over at Princeton University Center for
I'm
Economic
Rosalind
Policy
Chin,
Studies, and, of
Bloomberg
course, as we
Daybreak
should
Asia.
point out, a Bloomberg Opinion
Bloomberg
columnist and a
Daybreak
senior
Europe.
advisor
Bloomberg
to Bloomberg
Daybreak.
Economics. We'll be back in a moment.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Listen to you. This is Bloomberg Business Week. If you missed any part of that conversation with Bill Dudley, be sure to check it out on the Bloomberg terminal and at Bloomberg.com. Also check out what's going on with Zoom. That stock is down in the after hours, down about 7.4% following its latest earnings release. The company seeing third quarter revenue 1.015 billion to 1.02 billion. The estimate out there is for 1.01 billion. That's just one of the headlines that we got from Zoom. So let's make some sense of it. Let's bring in our Bloomberg Intelligence technology and media analyst, Amin Ben Said. He is right next to me in our Interactive Brokers studio. So, Amin, investors don't seem so happy. Walk us through the quarter and the headlines that we got from Zoom.
Absolutely. So I think the disappointment there, a little disappointment was the moderation in the enterprise customers. So
that's the big customers that pay a lot more than my family pays to do Zoom with my family.
Exactly. Those are the customers that pay around 100,000 a year minimum. So that was actually the bright spot for them because in the last few quarters, they had the overall customer base declining, which I was not declining, moderating, which was expected post-pandemic. But the enterprise customers was growing, and that was going to be the focus for them. But now it seems like it's moderated a little bit, and I think that's why you see the price reaction that we've seen today. And in a way, I think it makes sense, and we understand why Zoom is having this lot of collaboration tools to make your product stand out and make these enterprise customers want to get your product instead of a Microsoft or a Google or a Cisco's WebEx. So I think it's a good first step. It's a very good first step because they bought the leader in the contact center as a service market, which was surprising to many. But more probably would be needed to really supercharge this growth rate.
Because I do feel like when it comes to enterprise customers that you typically, you sign up with one of the big guys or with a platform, and then you continue to build on that platform, right? It's cheaper, I would assume, than kind of getting rid of a platform and starting all over again. And that's the struggle, or that's what really Zoom faces at this point.
Absolutely. I mean, like I mentioned, when you look at the collaboration space, especially when you go to you see like competitors like Microsoft, they have so many collaboration tools they can offer enterprises.
Yeah.
You can think of either like the calendars, emails, and all the office tools. So there is a significant value proposition there. Zoom has a strength in the communication sector, in the video platform, and its ease of use. But there is the question to really capture that high level of growth, you probably need more to convince that customer to make the switch or get your services.
Well, and here's the thing, when you're talking about technology, I mean, you know this better than most of us, is that I would never rule out, though, an upstart from turning upside down the establishment. We've certainly saw it with Tesla. What does Zoom have to continue doing to continue kind of being this $103 billion market cap company that just has taken off so much in the last year and a half?
Very good question. So the enterprise needs...
And just got about 40 seconds.
The enterprise needs are very different from consumers like us. So, for example, security extremely important, which was an issue for Zoom last year, but now it's not an issue anymore. Those are the things that enterprises look for. So even if you're a startup, if you don't have that strong infrastructure, if you're not cloud native, you're probably gonna fall behind, and you really need to have a significant scale to get that enterprise customer.
All right, so stay tuned essentially for that one. Zoom, though, definitely taking a hit in the after hours. The stock continuing to trade lower. It is down as we speak, down about 8.7%. We do have a headline crossing to the Bloomberg terminal. Let me just quick bring it to you. The State Department raising Germany travel advisory one notch to level 3. So we continue to see that playing out against the pandemic. Amin, thank you so much.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
There's a lot going on this Monday in August. In fact, it's the last Monday in August here in 2021. Our next guest has his hands in a lot of different pots. It's why we like talking to him, from aviation, real estate, and of course the financial markets. David Edelman is back with us, and we'll get to him in just a moment. First up, though, let's get back to your top business headlines, including those Zoom earnings, the stock down in the after hours.
Indeed.
Here's Charlie Pellet.
Zooming lower now by just about 10%. We're keeping an eye on Zoom Video Communications, out with a sales forecast that did fall short of some analyst estimates, raising concerns the company will have difficulty maintaining rapid revenue growth as workers turn away from remote meetings. Again, shares of Zoom now down by 9.51%. Stocks did advance today. The Dow lower, but the S&P, NASDAQ both move higher. They were led by some of the world's largest technology companies. Traders are also assessing the impact from Tropical Storm Ida, which sank insurers and energy firms while pushing gasoline higher. S&P up 19, higher today by 0.4%, a record there, 12th for the month of August. The Dow lower by 56 points, down about 0.2%. NASDAQ up 136, up by 0.9%. 10-year up 8/32, 10-year yield 1.28%. Spot gold down 0.4%. 18.09 the ounce, and West Texas Intermediate crude up 0.5%. WTI 69.08 a barrel. Well, among today's biggest winners, a couple of so-called meme stocks, specifically Vinco Ventures and Support.com. Dan Pipitone is co-founder of Trade Zero America. He was our guest right here on Bloomberg Business Week.
How funny is it where, for the longest, for the vast majority of my career, it was always institutional, with retail and the average investor being sort of the last to know, where now it's kind of been, turned on its side, where everyone is trying to figure out where retail's next attention is going to be and then hop on that bandwagon.
And today we did see shares of Vinco Ventures surge 33.2%, and Support.com up today by 38.2%. A headline from the Bloomberg Professional Service: the United States has completed its Afghan pullout, ending a 20-year military presence. It's a story that we will have more about coming up here on Bloomberg Radio, also specifically on Sound On with Joe Matthew tonight, beginning at 5 o'clock Wall Street time. S&P up 19, a gain of 0.4%. Dow Industrials down 55, down 0.2. NASDAQ up 136, up 0.9. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And just to reiterate, the U.S. war in Afghanistan, it has been the longest in American history, lasting 20 years. That headline Charlie just mentioned. The U.S. completing the pullout from Afghanistan, ending that 20-year military presence. There is a press conference at the Pentagon underway, and we will continue to monitor headlines on that and bring them to you as they are known. In the meantime, we know that leaders of companies, institutions, of investment firms, they have been dealing with a lot of headlines over the last few months, in particular, of course, anything to do with COVID and the virus, but also dealing with geopolitical events, including what we just talked about, what's been going on in Afghanistan, a crisis, if you will, obviously in the last couple of weeks. So let's get to one leader who we've leaned on to talk about the aviation industry, real estate, and of course the financial markets. David Edelman, he is CEO of Campus Apartments. They manage more than $2 billion of on and off campus housing and real estate. He's also the founder and CEO of Darko Capital. He's with us on the phone from Philadelphia. Hey, David, nice to have you back. How are things going?
Hey, Carol. Thanks for having me again. They were going great until you reminded everyone that this is the last Monday of summer, so which is tough to swallow.
Can you believe? Can you believe? I mean, it's not been a quiet summer. It's been a lot going on, and another headline just crossed that the U.S. State Department raises travel advisory on Canada to level 3. We are seeing once again that pushback on the economy opening up, the global economy, opening up because of the Delta variant. How is your world going, and what are you seeing, how things are moving, either forward or backward or a little bit of both?
It's two steps forward, one back, but a little bit of everything. I think, from the aviation perspective, we've talked about my involvement. I'm the lead director of Wheels Up, and I think, which is kind of the largest on-demand aviation company in the country. We just went public about a month ago, and private aviation is obviously doing very well in this post-pandemic world.
And continuing to do well. You guys are continuing to see as much demand. I mean, the stock's down about 32%, a little bit of a hit so far since that. What can you tell us about demand there?
Demand is great. About a week ago, we reported really strong second quarter earnings about a couple weeks ago, and really excited about the future there. And private aviation, it's just become more effective, efficient, and accessible, and that's really what we're doing at Wheels Up, is kind of creating this marketplace where we can match up people with supply.
All right, so because I know we talked a lot about aviation, and you saw a lot of people who maybe didn't do private aviation before really take advantage of it during COVID. That demand level is staying at what we saw during the pandemic, or is it going above that, or is it going a little bit below it?
No, it's definitely where it was and headed higher. To be honest with you, people are especially come spring, as people started making forward plans before the Delta variant about travel and getting out there a little bit and enjoying summer. We saw demand pick up.
Well, speaking of getting out there, I was on a college campus over the weekend, dropping my daughter for the first time, and just hearing the president of the institution and others speak about how great it was to have kids back on campus, because they haven't had them that way. Tell us what you're seeing, because you deal with on and off campus housing. What are you seeing?
So last week I was also dropping my daughter off, so same thing, and it felt great to do it. I think we mentioned, I think last time I was on, during the pandemic, a lot of students still chose to kind of quarantine in their college apartment or dorm room, not wanting to live with mom and dad after maybe having experienced a brief time home. But it was online remote learning. I think now what you're seeing is the schools are opening back up. We could certainly talk about those that are mandating vaccines, but they're masking up and they're back in action. And so I think it's healthy for these students to get back there with their friends and enjoy the college experience, which is more than just the education in the classroom, but the education of the self and making friends and doing all of that. So we couldn't be happier to have people back on campus.
Well, and increasingly you are seeing institutions that maybe weren't mandating vaccines all of a sudden in the last, I want to say early August, all of a sudden they were like, yep, you have to do it. And that is definitely, I think, changing the trajectory of schools being able to open up, certainly on the college level, but also at lower levels. Hey, David, sit tight for a second, because we've got to do a little bit of world and national news, but we're going to come back with David Edelman, founder and CEO of Darko Capital, CEO of Campus Apartments. He is there on the phone in Philadelphia. In the meantime, there is a lot going on, even as we are slowly getting ready to wrap up summer, including, we just mentioned about the U.S. completing that Afghan pullout. Let's get to Nancy Lyons. She's in D.C. with a full menu of world and national news.
Thanks, Carol. Well, the U.S. has fully withdrawn its forces from Afghanistan. That word coming just minutes ago from General Kenneth McKenzie, the commander of U.S. Central Command.
This afternoon at 3:29 p.m. East Coast time, and the last manned aircraft is now clearing the airspace above Afghanistan.
The withdrawal ends a 20-year war that began shortly after the 9/11 attacks. Well, President Biden is promising comprehensive federal help to states stricken by Hurricane Ida, which left 1 million homes and businesses without power and left vast destruction from storm surges and flash floods. Bloomberg's Irv Chapman has more from Washington.
The President convened a teleconference with state and local officials.
Folks get knocked down, we're there to help you get back on your feet.
Louisiana Governor John Bell Edwards.
Hurricane Ida came on shore with everything that was advertised.
Yep.
The surge, the rain, the wind, all of our levee systems performed magnificently. None of them were breached.
The governor and other officials spoke of the long haul ahead to rebuild structures and reconnect power and communications. In Washington, Irv Chapman, Bloomberg Radio.
U.S. Attorney General Merrick Garland has summoned lawyers all across the country to help prevent evictions following the Supreme Court decision that rejected the Biden administration's eviction moratorium. So far, more than 40 major law school deans are committed to helping. Well, you'll need to wait on that trip to Europe. European Union countries have voted to reimpose travel restrictions on Americans due to the new surge in coronavirus cases in this country. Those curbs had been lifted in June, but the current level of infection in the U.S. exceeds EU guidelines. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons in our D.C. Bureau. And, man, Charlie Pellet joining me once again. If I just pull up, Charlie, the most read on the Bloomberg, it's my all-time favorite function. I always love to see what Bloomberg terminal users are reading. And I do it. You can do it for 8 hours. You can do it for the past 60 minutes. I'm pulling up in the past hour. Top is a story out of Dow Jones, has to do with the SEC chairman says banning for payment of order is on the table. We're talking about Robinhood specifically. And if you take a look at Robinhood today, that stock definitely slid in today's trading session. It was one of the movers I focused on. It was down about 6.7%, 6.9%, but it also was down. It was kind of a double whammy for this one because you also had the news about PayPal talking about maybe doing some trading on a platform. So there was a lot of stuff going on here. But it's a busy Monday in the summer.
A busy Monday, last Monday, as you pointed out in August, and there's a lot going on. READ is the function on the Bloomberg. As Carol mentioned, you can set this thing for 1 hour, 8 hours, whatever, and find out what are some of the top stories that our readers are looking at. You mentioned the SEC chairman there, Gary Gensler, banning payment for orders, quote, being on the table. Carol, the other big story today involves vaccines. You got Pfizer and BioNTech. Its vaccine recommended by the CDC advisory panel should point out Pfizer shares up today by 0.3%. German partner, the ADRs of BioNTech, lower today by 3.8%. And also another incredibly important story for our listeners on the West Coast. We've got evacuations now out of the Lake Tahoe area because of what's going on with the wildfires there.
Check out my Twitter feed because I retweeted a picture of someone who tweeted a picture of Lake Tahoe, and all it is an orange dark haze. California's Caldor fire moving closer to Lake Tahoe, prompting officials to evacuate the town of South Lake Tahoe. And so it's just a reminder of some of the climate change problems that are continuing to really trouble some areas specifically of the United States and elsewhere. Charlie, thanks.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, keeping an eye on Zoom video communication. Shares now lower by 10.2%. It delivered a sales forecast that did fall short of some analyst estimates, raising concerns the company will have difficulty maintaining rapid revenue growth as workers turn away from remote meetings. Stocks moved higher today. S&P at a record up 19, higher today by just about 0.4%. We also had the NASDAQ Composite Index advancing up 136 points, up 0.9%. That, too, a record for the NASDAQ Composite Index. NASDAQ again up 0.9, the S&P up 0.4, while the Dow fell 0.2%, down 56 points. 10-year yield, 1.27%. 10-year up 8/30 seconds. Gold, spot gold down 0.4%. 18.10 the ounce. West Texas Intermediate crude up 0.6%. 69.14 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest. Still with us is David Edelman. He's founder and CEO of Darko Capital, CEO of Campus Apartments, on the phone from Philadelphia, still with us. Hey, David, you were talking about what you're seeing in terms of colleges. So kids are back. What's been the demand for on-campus, off-campus housing?
So the demand has been strong. Kids really wanted to get back out there, live with their friends. And, when you think from a COVID perspective, the products we build are really kind of 4-bedroom, 4-bath units, so everyone has their own bedroom. It's not high density. It's very safe and effective from a COVID perspective. And we're seeing, from a occupancy perspective, we're in the high 97, 98% across our portfolio.
Is that unusual or is that pretty normal?
No, we're back to basically pre-COVID levels.
Okay.
And so I think the only dip you would find across the country is probably a little bit less international students who did not come back, and that's maybe a couple percentage points.
So what does that tell you? I think, it's interesting. We did a story earlier. Let me just backtrack with our Steve Matthews about the metrics that we're using to really figure out what's going on in the economy and the impact that the Delta variant is having. So you were looking at hotel bookings, we're looking at airline miles being flown, we're looking at job opening postings, and a lot of those metrics are showing that things are slowing down again. How would you describe economic activity from the different lenses that you actually look at the economy through?
Yeah, I see it differently. From the businesses we're involved in, obviously from real estate to aviation, we don't see the slowdown. We see the same trouble people are having in trying to get employees. That's certainly a challenge. But we definitely aren't seeing kind of the slowdown that you just mentioned.
Oh, you're not? Okay, that's interesting. Are there any concerns that things could start to roll back substantially? We've certainly seen companies rolling back and not bringing maybe some of their workers back to the office, putting that off for a few months or maybe even into next year.
Yeah, we're seeing kind of the people kind of like take the wait and see approach. Those companies that had announced kind of the post-Labor Day back into the office, you're seeing them kind of do kind of a little bit of a stutter step and saying, well, let's wait till October and see. And I think people are kind of just pushing it back, seeing how these boosters come into play. I know that's certainly how we're looking at things as well.
You sound pretty calm. So tell me a little bit about the investment environment right now, because, you were one of the early investors in Wheels Up. We talked about that earlier. Where are you finding opportunities? There's a lot of money sloshing around in the economy, thanks to low rates, thanks to wealth creation for a big part of the U.S. economy. Obviously, the Fed easy policies help create some of the liquidity, a lot of liquidity in the marketplace. Where are you committing new money, and what new investments have you been making?
Interestingly, you mentioned during the commercial break about, the fires in California and a little bit about climate change and things like that. We've actually made a big push in climate tech companies. And, what we're really looking to do is invest in companies that are reducing greenhouse gas emissions, from software and hardware solutions. We've recently, in the last 90 days, invested in a handful of unannounced companies that are working on reducing methane emissions, a handful of decarbonization companies. And so we definitely see that as a trend in some place where we think you can, there was generally a shortage or a lack of capital because maybe people just weren't as into it. And so we're looking to put capital there.
What's changed in that? Because we've been talking about ESG, certainly, and climate change for a while. It does feel like in the last year and a half, and maybe it was seeing the world shut down and the skies clear up that made us realize, wait, we can maybe make a difference. We've talked about methane, the difficulties with that, but also how in a shorter period of time you can do some cleanup, serious cleanup of it. What do you think's changed in the investment mindset?
I think that what's happened is that you had the concept of ESG, which I think first started with like, hey, that's the do good, feel good. And then you have the commercialization, which then allows people to access it from a financial perspective. So that way you can kind of put your money where your mouth is versus just saying, I want to make a difference. You know, I'm going to recycle, or I'm going to, you know, do business with companies that are more, you know, responsible. And so I think, you know, there's been a bunch of founders, and, you know, even old founders who've been around, you know, Chris Sacca just launched, who hadn't been in the fund business in a long time, just launched a fund called Lower Carbon to, you know, really tackle this, you know, where other people haven't really focused in a climate change fund, and he's doing it.
So before we go, one of the other investment areas that you've done is beverages. LeBron James' new tequila. I have talked with some celebrities, Nick Jonas among them, Sam Hewen, who's got a new whiskey of the Outlander fame. More and more getting into spirits. What is it that you find interesting in the beverage space, and what guides your investments there?
What's interesting about the beverage space is really kind of, you know, certainly during COVID, you know, consumption certainly went up. And I think creativity is going up. So, you know, one of our companies we're in is a ready-to-drink beverage called Vide. And what I liked about that is we saw beer sales declining over the years, and people want maybe a healthier option. And so this is a vodka-based kind of ready-to-drink beverage in a can. We just bought a organic vodka called American Harvest. And as we think about kind of, you know, that American spirit, it's made in Idaho, and, you know, vodka is still the biggest spirit out there, but it's not as popular as people talk about tequilas, like the one we did with LeBron and Mav Carter and, you know, the other spirits that are out there. And so I think that the variety, people know what they want. They like the ability to have choice. And I think spirits is kind of finding its moment where people want to be able to have multiple options to choose from.
Yeah, that's for sure. Definitely played out during the pandemic as well. Hey, David, nice to hear from you. David Edelman, founder and CEO of Darko Capital, CEO of Campus Apartments, with us on the phone in Philadelphia. All right, coming your way in just about 5 minutes' time, Joe Matthew with Sound On. Joe, big headline about the United States completing that pullout from Afghanistan. 20 years we've been there.
This is happening as we speak. We just learned from the Pentagon, they're briefing reporters right now, that the last airplane has left. The U.S. is out of Afghanistan. And Carol, with the amount of time we have spent talking about this and the horrible images in many cases we've seen over the past couple of weeks, never mind last 20 years, make this an historic and very important moment. We're going to be joined coming up by retired Brigadier General Mark Kimmitt, who was the former Assistant Secretary of State for Political Military Affairs, former Deputy Assistant Secretary of Defense for Middle East Affairs. He's a real expert on this region. We'll also talk to our own Craig Gordon, our Washington, D.C. Bureau Chief, who is an embedded reporter in Afghanistan for a spell, and of course, our Bloomberg politics team, Rick Davis, Jeannie Sheehan Zeno with us. We have a lot to digest, and I'll note, we also will likely hear from the Secretary of State. As soon as the Pentagon briefing is done, they're still talking. We will likely bring you to hear from Secretary Antony Blinken. This appears to be the face of this story right now. There's no word, Carol, that Joe Biden will be speaking tonight.
Interesting. Okay. Yeah. Well, looking forward to the coverage. I know you guys will be there, especially on all of those live events. Some headlines continuing to cross. Pentagon says every single service member is out of Afghanistan. Says they believe the Taliban will have their hands full with the ISIS-K. That's that offshoot of ISIS. The U.S. did not get everybody out that they wanted to get out. That is a direct quote. So stay tuned for Sound On with Joe Matthew coming up in just a few minutes. For the whole Bloomberg Business Week team, have a good Monday evening. This is Bloomberg.